rates are going up now not because of central bank speak. They're going up because growth is proving to be stronger than expected.
A strong labor market and inflation that does remain persistently high really doesn't support any kind of pivot by the Fed.
The reality is the equity markets and the bond market have not believed the Fed up to this point. They just don't believe it.
If you look at the statements alone from all of these central banks, they lean hawkish.
Right now, this labor market just continues to be a stubborn kind of nuisance here for the Fed.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
You're a liar. Congress was like Parliament last night, wasn't it?
Is that, yeah,
You know, it had like a Parliament feel.
Yeah,
Did he
yeah,
like that?
I thought of that, actually. Did you feel that?
He probably likes it. I mean, I don't know. It's just circus. That's what it felt like to me.
Felt like a circus.
Yeah, is that
Lovely.
what it feels like in Parliament?
Good morning to you. It is a circus over in Parliament, bit of theatre for you. We'll get to that a little bit later. From New York City, this is Bloomberg Surveillance with Tom Keene and Lisa Abramowicz. I'm Jonathan Ferro. Futures down 1/4% on the S&P. I know what you're laughing at. We're not going to talk about that right now, okay?
John, you've never kissed me like that.
Just let's wait for Anne-Marie and see what she's got to say about this in about 10 minutes. We need to talk about Chairman Powell as well. I'm going to save us.
We do.
At least I'm going to try. Quote of the last 24 hours came from Mike Gapin of Bank of America Stop. This is what he said. Volcker has left the building. The Fed is embracing painless disinflation and hopes it continues. We're not in Wyoming anymore. Back to Wyoming, Jackson Hole, the end of August. That Fed chair, Tom, is not the Fed chair that sits in front of us now.
It's really true, and I thought the one with the best perspective on this yesterday was Michael Darda. We're talking about inflation as the third rail, and the idea here is the worry, is it a 70s inflation? Is it a Korean War inflation? And Michael Darda of Roth MKM, I thought, was brilliant yesterday, going back to Friedman and saying it's neither. It's an inflation having to do with the Biden stimulus, the back end of the pandemic stimulus, and we're weaning our way off it. And that's where the debate begins. It's not Volcker.
I'd say there's a bit of good news now, though. The gap between the Fed and this market isn't actually that big anymore. So that's the good news. I guess maybe we don't have to listen to Chairman Powell in quite the same way as we did before, and we could just focus on the incoming information, Lisa.
When you say we, is it the bond market or the stock market? And this, I think, is really the interesting divide that's emerging in markets. Bond markets are hearing what Jay Powell is saying, not the fact that he isn't pushing back or that he doesn't sound like, an 8-minute, very direct, we're not going to blink. And he's being more nuanced about it. The bond market still hears 5.1% terminal rate for longer. Does the stock market?
Well, right now, given the rally we've seen so far this year, perhaps not.
Well, but this to me is the most interesting divide. At what point do we close that gap, and what has to happen in order for this melt-up feel to really get dissipated?
We've got to see some stronger data potentially, Tom, on the labour market side. I think we've got to see some hotter inflation reports as well. You've talked up February 14th.
I have.
Next week.
Others have as well.
CPI. You want to talk about last night? You're desperate to do this, don't you?
No, I mentioned 3 times. I don't want to talk about it.
You've referenced it 5 different times now.
I want to talk about Abramowicz. When I did my cameo yesterday, thank you, Kriti Gupta, Vonnie Quinn and all, for letting me speak with Mr. Rubenstein and others after the soiree yesterday. And I mentioned Abramowicz 3 times, John, because the insight yesterday was a 4.x% one-year Treasury bill. And that's what we're really talking about here is with a vengeance, John, things cost money now. That's what we're seeing.
So the additional thing you've got to think about, and I know it makes sense, let's buy the front end, let's take 450 and run away for the hills. What we heard yesterday from several guests, and I think this is an important point, the reinvestment risk 1 year, 2 years down the line. Can you pick up 450 in a year, 2 years, in the way you can now with the same ease? Or do you have to take the additional risk and maybe much more risk because the interest rate backdrop changes? Now, that's the kind of decision, Lisa, you've got to make looking at fixed income at the moment.
Especially if you do buy into this rapid disinflation, even if it stops at 3%, then the 10-year Treasury seems to hold some value. What I thought was interesting yesterday was a lot of our guests seemed to think that duration kind of had been overplayed. The trade was already up, and they were kind of a little less confident in going into 10-year Treasuries at 3.5% than they were, say, a couple months ago. So to your point, maybe the reinvestment risk of not being in that longer duration instrument isn't as great as it was a couple months ago.
Let's get to the equity market and the price action before Tom brings up that kiss again. Equity futures down about 1/4% on the S&P. Imagine for the people just tuning in that still don't know what you're talking about, TK.
I didn't know what I was talking about.
You're responsible to explain to them what you are talking about in just a moment. In the bond market, yields are in a couple of basis points. Your 10-year, 364.90, and euro dollar, we've seen 110, 106, all in the last week on euro dollar, Lisa, 107.45 right now.
so hard to parse out what to pay most attention to, especially as you have a host of speakers from the Federal Reserve coming out perhaps to do some damage control after yesterday's confusing response, at least in markets, to Fed Chair Jay Powell's message. I mean, really, this is the Fed parade. New York Fed President John Williams, Lisa Cook, Fed Governor Michael Barr, Fed Vice Chair for Supervision. We've got Raphael Bostic of the Atlanta Fed, Neil Kashkari of Minneapolis, and Chris Waller of the Fed. All lined up today.
They're all on the same page.
Yeah, well, are they? And this is really going to be the question. Is there nuance that they really highlight that people read into what Fed Chair Jay Powell said yesterday simply because he did not come out and say, I don't like that the market rallies when I talk? I mean, really, that seems to be what the market was looking for. Today, we also get a post-State of the Union election tour, maybe. Biden and his cabinet are going around the country and discussing all of their plans. President Biden is going to be in Wisconsin. Janet Yellen, Treasury Secretary, is going to be visiting a battery factory in Tennessee. And Commerce Secretary Raimondo is heading to New York. She's going to be talking about the semiconductor manufacturing incentives and how to really grow some domestic production. That really is gaining some interest in markets and also from a policy perspective. And today, the earnings parade does continue. The focus really is on the consumer. Uber before market, Disney and Mattel, and MGM, among others, after the market. How much do people keep spending, John? And that really could potentially give a sense of how long we could see the disinflation on the goods side and the lack thereof on the services side.
Hey, Lisa, thank you. Thank you very much. We've got such a fantastic audience. This comment came in, Tom, almost immediately. Point of order on the comparison between Congress and Parliament. If you call someone a liar in the Commons, you'll be asked to leave the House for using unparliamentary language. You'll be asked to leave.
My first visit years ago with Bloomberg to Parliament, which was a great honor, I was thunderstruck within the violence of the debate, how cordial everyone was.
They're still polite.
Yeah. Gordon Brown was like this with whoever.
Violent but polite.
And with David Cameron, I'm going to guess. But whatever the debate was at the time, there was still a politeness like you every day.
Oh, so polite.
It was like,
and thanks for that, Tom. I appreciate that. I'm very diplomatic.
Today.
And thank you to Trading Floor Audio for sending that across. Thank you very much. Joining us now is Jonathan Stubbs, the equity strategist at Berenberg. Jonathan, great to catch up with you, sir. Has Chairman Powell given us a green light to buy risk?
I don't think so, because to buy risk at this point, you need to get comfort with macro and fundamentals. Technicals need to be on side. If we are sort of religious about the yield curve, when the yield curve's inverted as it is, it has not been a great time to be taking on risk blindly over the last 20, 30, 40, 50, 60, 70 years. So there's no strong signal there. Fundamentals, you have to believe that a US nominal growth number, which is going to be heading around 4% in the recovery year next year, real plus inflation, is enough to juice earnings. Again, that's tough. And on the technical side, the support from price momentum, such as golden crosses, but most technical indicators that we look at, RSIs, breadth, sentiment, are not giving the same green lights they were in October. So I think it's very tough to take what Powell said and to say risk on.
Jonathan Stubbs, Jonathan Ferro lectured me yesterday on the strength of the FTSE and something of a new high in the FTSE, a resurging equity market within your United Kingdom. Is the FTSE for real, and is there going to be some form of new generation of it post-Brexit, post-pandemic?
No, interestingly, the UK was probably the strongest developed equity market last year because it had the best sort of natural stagflation hedge within the index. It's very long, as you know, commodities, defensive growth, and financials are well set. So what it has to do, if it wants to retain a sort of a leadership or outperform role in global equities, which we think it can, it has to pivot to the rest of the market also catching up with that sort of natural stagflation hedge. And that needs the UK economy to improve into the second half of this year. It needs the dollar to be softer, which is a key call for us and has been for the last few months. We think the dollar will remain soft. And if you get a softer dollar, stronger sterling, if you can get the mid-cap stocks performing well into a recovery second half of this year, then the UK can continue to perform and be one of the lead parts of global equity markets. But to us, it all points actually to the US no longer being the sole driver of the global equity block, which it has been for so many years, of course.
How much of that argument, Jonathan, really is hinged on the tech dominance in U.S. indexes and the lack thereof in some of the European benchmarks?
Yeah, it's a big part of it. I mean, what's interesting is just hearing your conversation before I jumped on. If you take the NASDAQ 100, and you look at the free cash flow yield gap between the NASDAQ and US 2-year risk-free over the last 10, 12 years, that's averaged 400 basis points. So any investor could have bought US tech, the lead engine of the post-financial crisis bull market, and taken this 400 basis point yield pickup. Today, that yield pickup is zero. And clearly that's a function of how steeply the short end has moved up, but it also shows in relative terms how that yield pickup advantage over risk-free that technology had as a sector is no longer there. And then secondly, very briefly, the surplus free cash flow yield which US tech provided relative to the broader US market, say the S&P or another sort of broad index over the last 10, 15 years, disappeared around 18 months ago. So you used to be able to buy US technology relative to US equities and harvest this surplus free cash flow premium. And therefore, tech was a cheap sector on a free cash flow basis. It no longer is. So to get the same tech leadership going forward, we need to go back to the free money period. That's not happening anytime soon.
Jonathan, just 30 seconds here. Why do you think the market keeps rallying? Why do you think tech names keep rallying, considering that almost every investor who's come on this show says the same thing you do?
Yeah, I think, if I look at our toolkit and keep discipline to that, it's very hard to get really positive risk in terms of equity from a macro perspective. It's really hard on a fundamental perspective. US equity is trading 18.5 times 12-month forward earnings. The only time the US has traded more expensive than this in the last 50 years is when we've had liquidity bubbles, TMT, and post-COVID. So the US looks really, really rich. What's happened is we've had extreme positioning back in October, technicals, very supportive of risk on, and that's been playing out, and we have capital chasing that. So the only signals today which tell you to go out and take on more risk in the market and chase the market are actually price signals themselves. So, I mean, that can keep rolling for a while, but ultimately it needs the fundamentals and macro to support that. And that's where the challenge, I think, is for most buy-side, sell-siders who look at fundamentals and look at macro pathway.
Hey, Jonathan, this was great, and it's been too long, mate. Let's catch up soon. Jonathan Stubbs there of Berenberg, looking for that fundamental validation of the next leg higher. JP Morgan, they don't think it's coming. You heard from Mr. Stubbs there that he doesn't think it's coming either, Tom.
I think I'm waiting for the bears to readjust here. When do they not capitulate? That's too much drama. But how do they readapt and readjust to the resiliency?
Will they find the courage to be bearish? I think that's like the question, isn't it, Bramo? The courage to be bearish.
Yeah, that's what we're doing here.
Sarah Hunt joining us in the next hour from Ipound Saxon Woods. We're going to catch up with Anne-Marie Jourdain down in DC. On a chaotic State of the Union address. Up next.
Definitely a word for it.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. President Biden's State of the Union address foreshadowed what could be his re-election stump speech. The president highlighted accomplishments on infrastructure, climate, and consumer protections in his first 2 years in the White House. But there was heckling from Republicans on Social Security and Medicare, the border, and other issues. Turkey has begun to deploy thousands of soldiers to areas struck by 2 massive earthquakes. They'll help in rescue and recovery operations. The death toll in Turkey and Syria has now gone over 8,000. Searchers are still pulling survivors out of the rubble. Federal Reserve Chair Jerome Powell is sticking to his message that interest rates need to keep rising to put down inflation. At an event in Washington, Powell floated the idea that rates may reach a higher peak than traders and policymakers anticipate. He said that if the job market remains hot, the Fed may have to do more. Ukraine's President Volodymyr Zelensky will be in London today to meet with Prime Minister Rishi Sunak. They'll discuss British support for Ukraine's military, including sending equipment to help counter an expected Russian offensive. Sunak will also offer to expand training to include Ukrainian fighter pilots. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
Folks, the story of America is a story of progress and resilience. 2 years ago, COVID had shut down, our businesses were closed, our schools were robbed of so much, and today, COVID no longer controls our lives. We've already created your help, 800,000 good-paying manufacturing jobs, the fastest growth in 40 years. We're better positioned than any country on earth right now. But we have more to do. Food inflation is coming down, not fast enough, but coming down. Inflation has fallen every month for the last 6 months.
The President of the United States on the State of the Union, live from New York City this morning. Good morning. Off the back of that address and off the back of Chairman Powell's interview down in Washington, equities look like this. We are down after a bounce yesterday. We're negative by about a third of 1%. We are lower on a 10-year yield by a couple of basis points at 364.72. And to Lisa's point, there is a ton of Fed speak today, Tom. A ton.
Yeah,
you get
who
New
do you
York's
listen to?
John Williams. I think you listen to Williams front and centre. And he's going to kick it off at what time? 9:15?
9:15, yeah.
Looking forward to that
disagree.
later.
I agree that Mr. Williams of San Francisco, now New York, serious academic chops, and of course he's got huge research on the real rate and the dynamics of this so-called R-starred, which I've never really.
In conversation whether neutral actually needs to come up.
Yeah.
Where have they got that at the moment? 2.5, something like that.
Something
in
like
the dot
that.
plot.
And a lot of people think it's got to go a little higher.
Got to be pushed
It's
up.
a raging debate. Adam Posen's been leading it. We thank him for his attendance as well. Let's get to the State of the Union here. Anne-Marie Horton picks up the pieces. She's our Bloomberg Washington correspondent. I love, Anne-Marie, what the Washington Post did where they had the themes of the speech. And it's real simple. It was the state of the economy. Let's start with basics here of civics. Why did the president focus on the economy?
Well, I mean, you can go back to Carville, who always says it's the economy, stupid, when you're running for president, which is wanted former President Bill Clinton to focus on. But the president was given a gift on Friday of this very low unemployment number, and he wanted to lean into all the economic work his team was doing. Remember when he took over the presidency and his administration, they were dealing with a high unemployment rate. They were still dealing with COVID. And then, of course, they were dealing with high inflation. He feels that he was able to tame all of these things and at the same time keep a robust labor market. His issue, which we talked about yesterday, is this is not resonating with the public. So he talked about some of that economic anxiety and how he still sees more work to be done. But at the end of the day, he's very optimistic. And he thinks this is an agenda that Democrats could run on, because obviously this is somewhat of a soft launch for a 2024 bid for the president. And then the biggest issue that this Congress is facing at the moment is obviously the debt ceiling, and he wanted to make sure he focused on that and also paint a different picture from what some Republicans want to do and what the Democrats want to do.
MS, to your point, it's not resonating with the public in the way that maybe this White House would like. Reed Pickett has put out the story this morning off the back of a Gallup poll. Half of Americans say they're financially worse off now than they were a year ago.
Yeah.
That's the highest share since 2009. What can they do about that?
It's very difficult because many Americans, maybe they kept their jobs, right? We do see a very low unemployment rate, but they are not feeling it in their wages because of such high inflation. So I think as more inflation comes down, potentially that is something that can ease concerns for American and potentially help this administration. But that's where really the root of the cause is. And they spoke about that in background calls and some on-the-record calls ahead of the State of the Union. The president wants to make sure he addresses this economic anxiety, and he comes at it from a place, a human place, a place where he says he knows what it's like to grow up living from paycheck to paycheck. But at the moment, it is not resonating.
We know that how to address these issues brings up division in Congress. That's not a surprise to anyone. Where you can unite Congress is on the Chinese Communist Party. There was a fascinating line in this address from the president when he said, "Name me a world leader who changed places with Xi Jinping." AMH, when you heard that, what did you think?
And then he said, name me one, name me one. This was an interesting comment because this was off script. This was not in Biden's pre-prepared remarks, if you're following along as he's speaking. So he directly named Xi Jinping, which was not planned in the same way. So this was a bit of a moment for him to really take a hit at Beijing and Xi Jinping in particular. At the same time, these comments were also slightly muted in the sense that the president didn't directly name drop the incident with the Chinese surveillance balloon. He gave it a veiled reference, saying, as we did last week, we will, of course, defend our sovereignty. But he didn't discuss the balloon head on. And he was receiving a lot of pushback going into this speech about why they didn't shoot down the balloon earlier. But make no mistake, the president gave similar remarks as he has been about China. He wants to deal with China on issues like climate change that help American interest, in his words, but at the same time wants to make sure that they are combating China, especially in the economic sphere.
It was interesting where he went off script just a bit. And the energy space, he also seemed to go off script just a bit, talking about the next decade, that we need to rely on fossil fuel companies. Yes, they need to pare back some of their production or our reliance on fossil fuels. This really kind of went against some of the base. What was the reaction like that?
So when he said we're going to need oil and gas for another decade, the Republicans in the chamber laughed. They were laughing at the president in this off-script moment. And this line is likely going to come back and haunt the president if he decides to run and makes his announcement for 2024, because this is something that the progressive wing of his party does not want to hear. And this is also something that the president campaigned on. He was a climate candidate. He made climate change a key part of his candidacy to become president. And the facts of the matter is, reality was different when the president took the White House and they dealt with sanctions against Russia and a huge energy crisis. And that meant $5 a gallon gasoline. And now he's talking about the fact that they need fossil fuels and they want these companies to actually drill more.
You know, I don't know about you, Anne-Marie, but there was one big thing missing in that address from the President of the United States yesterday. Where was the happy birthday for Anne-Marie Jourdain? What happened to that? Just a little subtle happy birthday AMH. Don't you think that would have helped?
No comment.
No comment?
No comment.
No comment?
She's completely drinking the
I'll tell you why we didn't do this
Washington.
yesterday. We didn't do this yesterday because AMH forgot my birthday in December. Came to me a day late on it.
I did not.
So
that's not true. That's not true.
That is true.
I believe I also sent you ice cream for your birthday.
You might have done a day late too. Anne-Marie, thank you. Happy birthday.
Happy birthday.
AMH down in Washington. Happy birthday. Isn't that a beautiful thing?
It's very
Happy
sensitive.
birthday. Happy. It's an incredibly sensitive time.
It's just
very emotional.
What are we talking about?
It's an emotional time.
Do you think?
Oh, absolutely.
I'm so
Birthdays are
glad,
an emotional time.
John, I'm so glad you brought up the Gallup poll. Half this nation feels left
Sure.
out. To me, the State of the Union, and frankly, what we do every day is a bunch of suits and fancy ties and dresses talking to elites. And there's a whole other world out there that this president's trying to address. And frankly, the Republicans have a huge vested interest in. Every survey I see says the Republicans have a rural conservative vote. And they're out there, and it gets lip service within the major media, including us.
One of the most noteworthy aspects of last night was Kevin McCarthy trying to wrangle the Republicans. Like, guys, come on, behave.
Be professional.
Be professional, right?
Sure.
And then being like, oh, guys, please stop, and sort of they raised this real question about the leadership, and where is the gravitational pull on both sides of the aisle right now?
The biggest division in Congress right now is within the two parties.
100%.
And not between the two parties.
Right.
And that's the problem that both parties have got right now, Tom. That's going to be a problem for President Biden, and it's going to be a problem for any Republican who wants to try and unite this party in the primaries and take him on in 24.
Somebody yesterday in the Blur said this is so unusual, and I didn't take their head off, but I made it very clear. No,
that was me. You took
a
my head
reading
off.
of history is this is normal that we see. And John, it's normal at this part of the cycle. It goes back to an exceptionally fractious Democratic Party experiment, really going back to the 19th century. 64 was an absolute Donnybrook for the Republicans. And I think that's a lot like what it is now.
The 60s.
The 60s.
A lot of references to the 60s.
AUH20.
You got a song to go with that then?
No, I don't have a song.
I had that
Sing us
in
out.
my head yesterday, and I blamed you.
What, the song?
The Age of Aquarius.
What, him singing or the actual song?
I'm not sure.
I think Barry Goldwater would have liked Flying Burrito Brothers, frankly.
That sounds great. Sing us out, TK. You've got this. Equities down 1/3%, snapping a two-day losing streak on the S&P 500 in yesterday's session. Good morning to you. We look a little something like this on the S&P, down 1/3 on the Nasdaq, down 0.2. The scores year to date, the Nasdaq 100's up 16%, the S&P 500 is up 8%. The move we've seen in the bond market, we're higher by about 40 basis points or so in and around that kind of level from the lows of Friday morning. 444.38 on a 2-year. We come in a couple of basis points from the close yesterday. On a 10-year, 364.90, down a couple of basis points there too. We all wanted to know one thing. Had Chairman Powell changed his mind on anything after the payrolls report that he saw on Friday? Take a listen to what he had to say.
The labor market report for January, it kind of shows you why we think that this will be a process that takes a significant period of time. The labor market's extraordinarily strong. If we continue to get, for example, strong labor market reports or higher inflation reports, it may well be the case that we have to do more and raise hikes more than is priced in.
What you got there was the two bookends of the whole news conference. At the front end of the news conference, he was talking about, just validates our current stance. Then at the very end of not the news conference, the interview with David Rubenstein, you got, if it continues, we might have to go higher. But I think for a lot of people, no real change from Chairman Powell. Andrew Hollenhorst has this to say at Citi, reality check. The jobs report from Friday, quote, leaves us unconvinced that wage growth will continue to moderate meaningfully enough to return price inflation to 2%. Bramo, he's not alone.
A lot of people are saying the same thing and actually ratcheting up their expectations of what the Fed will have to do. What I thought was interesting is a number of Fed officials saying we couldn't believe that report. It didn't cohere with anything. It was almost like a skepticism about the data. I'm serious, because we heard this again and again. Even Jay Powell said none of us were expecting this.
I would be there, except what stunned me was the productivity report a few days ahead of it, where productivity was legitimate and unit labor costs were somewhat quiescent. If you hadn't had that occur, I'd totally agree with you.
Well, look at claims too, Tom.
Make of it.
Claims back down to like 180,000. Yeah. Look at the ISM, non-manufacturing ISM, jobs. The services indicator, boom, higher. Jobs, to your point.
Yeah.
So a lot of things line up. Not to say that it should have been 500K, but a lot of things line up with a B. Our next guest, Tom, was looking for 300,000, and that was like the outlier on the street.
Yeah, he was like strange.
Sure. Yeah. And then we got 517.
That outlier is Andrew Hollenhorst. He is chief U.S. economist at Citigroup. He's really provided intellectual leadership over the last year. We had a wonderful conversation a number of weeks ago here on the terminal rate, on where this Fed will go. Andrew, John and Lisa want to dive into that, but what I'd like to talk to you about are the days at UCLA. You had the great joy of all the heritage at UCLA of Axel Leonowood, who's one of the bravest economists I've ever read. He was way out front in the 60s and 70s. Some people have said he was the Marine coming out of the trenches on inflation for Volcker. Axel Leonowood would look at the M2 right now, and he would just simply say, what do we have going on? What do we have with the money supply coming down? You were weaned on this at UCLA. Should we pay attention to Leonowood's M2?
Yeah, thanks very much, Tom. And you're right. I mean, UCLA was a great place to go to school. And I think the message was to always take the theory seriously, but then confront the theory with reality. And I think that's what Axel would ask us to do today. In terms of M2, you're right, it's coming down, but it's coming down after being up very substantially. And I think that's what is difficult in analyzing this economy, that we had such big movements during the pandemic period, big increases in savings built up. And we're trying to figure out now, as those things are moving in the opposite direction, savings, for instance, are coming down, how much of a tailwind that's going to be for demand and for spending and for price pressure. And going back to that jobs report, it looks like we may have more of a tailwind than we might have thought.
What does your disinflation confidence look like? We've got this February 14th report. Do you have confidence to 5%, to 4%, to 3%? Or can you, as John mentioned in your note, get somewhere in the vicinity of Chairman Powell's 2%?
I think we're still a ways away from 2%. And we have some good news on inflation, which is that goods inflation has cooled. But that's really what we're seeing in these monthly inflation prints. And Chair Powell was trying to emphasize that. And let me just re-emphasize that a big part of what we've seen is used car prices that are coming down, goods inflation in general that has slowed. So that's good news on the inflation front. But if you look at those non-shelter services, you look at services away from housing, those are still inflating at a rate of about 4% annualized. So it does look like maybe some of the biggest, most aggressive inflation on the good side has come off. but we still have this services inflation, and that's what's going to be sensitive to the labor market. That's what's going to be sensitive to a number like 500,000 plus jobs.
So then why, Andrew, do you think that Chair Powell isn't more aggressive, isn't taking the same kind of Wyoming tone with respect to his press conference on Wednesday, with respect to that interview yesterday?
I was a little bit surprised, to be honest. I think David Rubenstein kind of set him up to make some change, make some differences from what he said last week before the jobs number versus after the jobs number. I think you could tell from the body language and from reading between the lines a bit that there is a change probably. It's uncomfortable for a Fed official to make too much out of any one monthly number, but it's not just the one monthly number, Lisa. If you look at the pace of job growth prior to the January reading, we're running at something close to 300,000 jobs per month. So I don't think we're going to continue to print 500,000 jobs a month, but even 300,000 would be enough to keep that unemployment rate moving down. It's already at a 50-year low. I'll go back to those days at UCLA. If you do the basic macroeconomics, it's a very, very tight labor market. It's hard to think that that wouldn't create wage pressure.
But we are seeing wage pressure actually decline. So what do you make of that?
So that's been one of the most interesting things in the data, that we have this really tight labor market that's actually tightening further. And then you're right, across a range of measures, we saw some softening in wages. But remember, it kind of goes back to what we were talking about earlier. This is a softening from historically rapid wage increases. We were reopening the economy all at once. Every restaurant was trying to hire workers at the same time, bring these workers back into the labor force. That, of course, is going to create a surge of wage pressure. So maybe we've come off of that surge of wage pressure against a bit, and we've come down from, call it 5% wage inflation to 4% wage inflation. But with a really tight labor market, I wouldn't expect that to slow further. And if anything, the risk is that it accelerates.
Andrew, after the March meeting, May 3, June 14, July 26, the school starts again September 20. Which of those meetings is the real crucible for this Fed, where they've really got to decide if they're demand structured, Phillips curve driven or not?
So I think you have a few signposts along the way. The March meeting is going to be really important because that's where Chair Powell isn't going to be able to do what he did in the interview yesterday and kind of say, well, let's let the data take us where it does. The FOMC will have to come out, and Fed officials broadly will have to come out with their projections for the economy, inflation, and importantly, for that terminal policy rate. Right now, they have it 5 to 5.25. If you look at that jobs report, maybe if anything, it should be revised up. So we'll see where the core inflation data comes in. We think it'll be a little bit stronger. Where does that median dot go at the March meeting will be really important. It looks like a 25 basis point rate hike is quite likely in March. The question is going to become May and June. They've talked about ongoing rate hikes, probably another hike in May. We think they're going to be hiking again in June, but this is when it might get a little bit more difficult because they're going to have to actually navigate between a labor market that, if financial conditions tighten further, should be slowing, and inflation that is still too high. So how are they going to navigate that tension in the reaction function? They haven't really had to do that yet.
Andrew, I love reading your notes. Every time they come out, I'm excited to read them, especially when everybody was convinced that we were going to go back down to 2% inflation by the end of the year and the Fed was going to be cutting rates by 50 basis points. There was frustration in your voice that I sensed of, hey, guys, the data hasn't changed. It hasn't softened. They're still going to have to hike that much more. What has the response been like to clients, the mood swings among investors that push back as the sort of view in the market has shifted from rapid disinflation to, well, maybe not?
It's interesting, Lisa, because we have this kind of stability that we're talking about from Chair Powell, trying not to change too rapidly as the data come in. And then you have the market, which, of course, is going to change very rapidly, going to try to figure out where that next data print is coming in. And we had a series of 3 cooler core inflation prints. We had softer wage data. So I think it makes sense that the market got a little bit more excited about these outcomes where inflation just comes down of its own accord. And I think our job here as economists is to look at all of the data and really figure out what's most likely in terms of an outcome. And despite the slower price inflation, despite the softer wage inflation, looking through to the tight labor market, looking through to services inflation, we just weren't convinced that really anything had slowed down in terms of an underlying pace. And well, you see how it just takes one data print and all of a sudden the market is looking more along those same lines.
Makes you wonder what happened to Jackson Hole Powell. doesn't it? What happened to Jackson Hole Powell?
The data caught up with them. These guys are ex
Massive
post.
change
All of a
in
sudden,
tone.
the data's changed.
Massive change in tone. Andrew, thank you. Andrew Hollenhorst there of Citi. At times yesterday, it was comical. That exchange between Rubenstein and Powell. Neil Dutta of Renmac.
He was
this
on
one.
fire.
Oh, Neil was great yesterday. He's firing me so many messages. This was brilliant. The fact that Jerome Powell believes $190,000 per year is a fair salary for chair of the Federal Reserve is dovish. Ask for a pay increase, Jay. That's what Neil had to say about that.
There's actually more to that, too, because at a certain point you do see some pushback, particularly the ECB, some of the staffers saying we want to raise, and the heads being like, well, we have to dampen wage pressures, and them kind of getting annoyed at that. So, how much is this actually a real sticking point?
Lisa, you featured Delta Airlines just out with this news, really Richard Clow writing it up. And, to Andrew Hollenhorst's thing on wages, is Delta the future? I mean, it's simple. It's a 5% pay increase after 4% last year, 9% in 24 months. The pilots are 34% over 4 years. They're in negotiation, which is 8.5% per year.
They're desperate to find pilots, this industry right now.
But
desperate.
I defer to Helene Becker and others that know way more than we do, but you just wonder, is this what Hollenhorst is talking about, where companies just capitulate?
Did you see the potential pay rise for the Labour Secretary? Have you seen these numbers?
I did not see the numbers, please.
I'll share the numbers. So you could go from $235,600 a year to be the Labour Secretary to $3 million. $3 million. And I don't think anyone's getting out the small violin for Jay either. He's gonna go out.
Yes.
He's gonna go out afterwards and get paid how much a speech?
All right. This is, to me, a really sensitive issue because people get mad about how much money they make after being in public office. But that's why they take jobs that don't pay that much.
Lisa,
so if they're going to pay them more, maybe, I don't know. I think it's complicated.
A moment of silence. Ferro nailed it, exiting the secretary's comments the other day when you talked to him about that.
He didn't want to go there, though, did he?
You were out front.
He said, no news today.
But
said
tomorrow.
so news tomorrow.
There's only one
He's like, I
question.
cannot wait to get rid of this guy. Does he cover ice hockey too? I hope he doesn't follow me to the ice hockey circuit. I've got nothing to say to him.
The ice hockey circuit, yeah.
Big Bruins fan, Tom. Told me he's a big Man United
Huge
fan
Bruins
too.
fan, and there's a little controversy. Jeremy Jacobs, who runs the Bruins forever, ever, was a campaign contributor. So
Did you see the puns? This has been brewing for a while.
Oh, is that what they said?
No,
If you're what? Go on, Tom.
No, he's going. This guy was one of the toughest union negotiators in the country.
Sure.
35,000 angry, tough union people up in Boston. He's going to 800 prima donnas that he's got to corral.
I was told to always lead with the headline, and we haven't. So if you're just tuning in, you've got no idea what we're talking about. The Labour Secretary is going to go on to be the National Hockey League Players Association Executive Director. And good luck to him.
With your relationship, we should get Walsh and Bettman together on
Let's go
set.
do that.
That would be
Have
good.
a good time. All right.
Yeah.
From New York, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. In his State of the Union address, President Biden called the Russian invasion of Ukraine a test for the ages. And it's a test he says the U.S. and its NATO allies have passed. The president also vowed to stand with Ukraine's President Volodymyr Zelensky as long as needed. The pharmacy giant CVS is pushing deeper into healthcare. The chain has agreed to buy Oak Street Health in an all-cash transaction with an enterprise value of about $10.6 billion. Oak Street aims to reinvent care for Medicare patients with low incomes and chronic health problems. CVS says the deal will increase healthcare access in underserved communities. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
We're just at the beginning of this process. The disinflationary process, the process of getting inflation down, has begun. It has a long way to go. These are the very early stages of disinflation. We think that we're going to need to do further rate increases, keep rates at a restrictive level for a period of time.
This is what got the equity market bulls going last Wednesday in the news conference. That was Chairman Powell talking yesterday with one qualification maybe. The disinflationary process has started, but he started to lean into, Tom, this idea it started in goods. hasn't spread to services in a pronounced way. But that was probably one of the very few qualifications in the address from Chairman Powell yesterday. No real change from Wednesday.
Yeah, I mean, frankly, I wonder if the 18 speakers today, and as you mentioned, Williams of New York Fed will give us some more visibility. What was interesting was the stock market ballooning on the initial comments, and then it tanked. And I was fascinated how the stock market worked its way back through the afternoon. I did not expect that.
Just
really.
trading on silly headlines that aren't really any different. At the start, he talked about the disinflationary process has begun. He repeated that with very few qualifications. The market rallied, didn't really push back against financial conditions over the last couple of months. Then at the end, there was this offhand comment as they returned to the labour market story and said, well, if it continues, rates might have to go higher. Okay. Not much in it.
Okay, if you read the actual narrative, if you read the transcript, he's not that dovish. He's saying the same thing. And yes, he mentioned the word disinflation. Oh, my goodness, everyone just bought on the risk assets. And that seemed to be what you did. But if you listen to what he was saying, it was nuanced. And it was basically saying we're going to have to go further. We're going to have to raise rates to a higher level. We're going to raise rates again. Sure. He repeated that. This isn't going to be exactly a panacea for tech stocks.
Okay, not to get too philosophical, but if you say the same thing, and the world around you changes, is the meaning the same?
I think that you do hear the tree. I think that you're right. The meaning does change because there is a political opportunity for him to say something about the market. And you know what? This does change something. And this data point is important. And that would have changed the tone in markets. I don't know. Maybe he doesn't have the consensus. Maybe he just doesn't have. You're right. That was notable.
We're going to find out, Tom, a little bit later with Fed speakers.
I think, we are.
I know you're excited.
It's as exciting as the auction process or reading the minutes.
Watch it.
Can't wait. Joining us now as we mop up in the State of the Union, Leslie Vinjamuri, who brings some real abilities here with Chatham House in London, head of their U.S. and America's program, and serious academics here on the oddity of Americans' movement out across the Pacific, movement out across the Atlantic. Leslie, let's go all Pacific here with China. The Washington Post had the grid of what was themed last night. Were you surprised how China was underplayed, how your world of foreign policy was underplayed last night?
I was. It was, I call it foreign policy minimalism. You had to wait. Not only was it brief, but it took a long time to get there. On China, I kind of wasn't surprised. This is a president that wants to resume diplomacy. He's made this clear from the start. And the last thing that he needs to do is to inflate the China threat. It's already been inflated by the balloon. The American public have seen it. They're all over it. Attitudes are hard.
Right.
Those Republican House committees are hard on China. So I think the president was a little bit cautious because he knows he has a tough road ahead on resuming that diplomacy that's been canceled or postponed between Blinken and others.
Dr. Vinjamuri, I think John Ferro has been really good at bringing this up repeatedly and not letting the business interests of America off the hook. How do you juxtapose the bipartisan angst of Washington and China with the fact everything in my kitchen is from China? How do we juxtapose our business relationship with our geopolitics baggage of decades?
Well, this is what Biden's pushing on, right? He wants to see, certainly I imagine, Tom, you have a very high-tech kitchen. He wants that tech produced and manufactured in the United States. That was, he didn't link it directly to China, but it's clear what he was saying. Let's make the semiconductor chips here in the United States. Let's manufacture here in the United States. Let's do jobs, the dignity of work. That is code in part for China has stolen your jobs, but he wasn't directly linking it. So you're right. Businesses want in. Those consumers it's not only about production, it's about consumption. Access to Chinese consumers matters. But this is a president who is very clear that it is about reshoring, nearshoring, friendshoring, and really about investing inside the United States and making, so much of what we heard last night was about not only jobs, but jobs with dignity, higher wages, taxing corporations. And, if he's successful, which I think it's going to be a tall order a high bar to cross over that tax on billionaires.
Well, I want to talk about the chip manufacturing and just bringing some of the tech home and dig in a little bit more. Gina Raimondo of the Commerce Secretary is going to be coming to New York to talk about that and how it's going to play out. Do you think that the investment, as delivered and structured so far, is sufficient to really bring some of the chip manufacturing prowess into the U.S. from the likes of the Taiwan Semiconductor Manufacturing Company that's consolidating its market share?
Well, it's obviously a start. It's a significant start. A lot of this will come down to, not the money that's been agreed, but it's implementation. The devil is in the detail of implementation. But it remains a tremendously competitive space, as you have rightly noted. And China's looking at this, and the Chinese are worried. Leading Chinese economists have made it very clear that this is a significant challenge, will be a significant challenge for them. And they will be working hard to find other partners that can help them compete as well. So it's perhaps not as large a number as one would like to see, but it's a very significant first step.
Watching the State of the Union, Leslie, do you think that President Biden emerges even more as the front runner for 2024? Do you think that he delivered the performance that really turbocharges his candidacy?
It depends on who you are. If you listen to the response that we saw from Sarah Huckabee, who very clearly made this about age. I am the youngest governor in America, and President Biden is the oldest president in the United States. That plays very well across significant parts of the Republican Party. But in terms of getting that Democratic nomination, if he chooses it, he's very likely to have the support of his party. It's difficult to imagine anything other than that. And, what he was doing yesterday was really putting tremendous energy, the visible energy, and engaging with his opponents in the House, demonstrating that he was on the front foot. I mean, that moment when they were heckling and he pulled them in unwittingly from their perspective into committing to holding on to Social Security and Medicare. So age is an issue, but he was really defying the odds. That was the intention in that speech last night.
Well, Leslie, you referred to Governor Arkansas, so let's finish there. The governor of Arkansas talking about age, I wonder if that's aimed at Biden or really aimed at her own party. I just wonder how competitive that field's going to be for the Republicans.
What I anticipate is we anticipate seeing Nikki Haley toss her hat into the ring on February 15th. We're bound to see Ron DeSantis. We're bound to see Mike Pompeo, the former vice president, as well, Pence, and then probably others, Glenn Youngkin, Kristen Sununu. I mean, I think the field is likely to be so broad that the risk, I think, that many of us anticipate is that plays to Donald Trump's favor at a time when he's really not doing especially well, even amongst those who previously supported him.
Yep, that party's got to figure that out, and quickly. Leslie, thank you, as always. Letty Vinjamuri there of Chatham House. Tom, I think this is where the conversation is going for the Republicans. You're going to have people in that party, and we talked about this about 30 minutes ago, that the biggest division is within parties. There will be people in that party in the primaries that just have one candidate. It's the former president, it's Donald Trump, and they're going to stick. They're not going to move. Then you're going to get everyone else diluted across a range of candidates. And Tom, as you work through the primaries, you're going to have to figure out quickly who you want to get behind if you want to defeat the former president.
I think I was at a convention, I'm going to guess 2004 or 2008, and I realized the convention wasn't about the party. It was about the narrowness. I don't even remember if it was Democrat or Republican, but the bottom line is I don't think a large part of the audience understands it's not about Republicans and Democrats. This will be a process of left and right with the different phrases they have in the modern day, but it's just liberal conservative polarities within each party driving the bus. Frankly, we saw that last night.
We'll pick up on that story with Anne-Marie in about 30 minutes. Lisa, we've got some earnings, just briefly.
Yeah. Uber coming out, beating expectations. Revenue in the fourth quarter, $8.6 billion versus the estimate of less than $8.5 billion. More interestingly, seeing first quarter adjusted EBITDA way above where it previously.
Unbelievable. There's a footnote here where the Abramowicz family led with that marginal lift.
I think you mean the Keene family. Uber up
Marginal
about
Uber
2%.
well.
Coming up, Sarah Hunt of Alpine Saxon Woods.
Rates are going up now, not because of central bank speak. They're going up because growth is proving to be stronger than expected.
The strong labor market and inflation that does remain persistently high really doesn't support any kind of pivot by the Fed.
The reality is the equity markets and the bond market have not believed the Fed up to this point. They just don't believe it.
If you look at the statements alone from all of these central banks, they lean hawkish.
Right now, this labor market just continues to be a stubborn kind of nuisance here for the Fed.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Live from New York City this morning. Good morning for our audience worldwide. This is Bloomberg Surveillance on TV and radio. Alongside Tom Keene and Lisa Abramowicz, I'm Jonathan Ferro. Futures right now down a third of 1%. We heard from Chairman Powell yesterday. TK, get ready for this. The Fed speak extravaganza starts at 9:15 Eastern Time.
It does, and after what we witnessed yesterday, I think it has a more importance. And I like what you said in the previous hour. John Williams front and center. Lisa, who else is there? But to me, it's a big deal, and I agree with John Ferro. John Williams matters today.
We're going to go through the entire list shortly, but we're literally going to hear from everyone. And some of the people have already spoken, like Raphael Bostic, and what we heard as well yesterday. But to me, from Neil Kashkari, I want to know whether there's a consensus. To me, John, that's going to be the real question, whether you get Chair Powell actually trying to reflect.
I just don't agree with that. I don't care what all the individual presidents think. Nobody's dissenting. I mean, John, in England, Catherine Mann makes an adjustment. Everybody stands up and listens.
Elisa's right to flag this. Yes, it is different here. It is different here compared to the UK. For some reason here, they're very scared of dissenting.
Exactly.
I don't know why.
It's ridiculous.
But I think we are just getting to that point that you'd expect them to start dissenting when we get to the level that some people say that is sufficiently restrictive. We're done here. And I think other people will be pushing for rate hikes.
If you don't get any dissent, that actually has more power, because all of a sudden then maybe Chair Powell just, had a bad day or wasn't feeling well or wasn't feeling particularly, harsh in terms of his messaging, but the rest of the Fed officials are going to do that for him. It does matter when you have the consensus driving the messaging and driving the optionality in terms of how many rate hikes are left.
Kashkari gets a lot of stick, and I think we've given him some stick on this programme, and sometimes it's deserved. I like the way he communicates sometimes. Just put out a blog. Put out a blog and just say how you think about the world. I kind of like that. I refer back to his blogs a lot.
You mean his Medium posts?
Yeah. Early January put one out.
Yeah.
Let's get to 540. You don't understand. There's a second phase to this. We need to hold. And I think he's pushed that story quite well.
He has, and he's been definitive, and other people have been less so. Well, the chairman, you're right. So this is really my question. Is the chairman trying to reflect the status of all of the Fed officials, or is he driving the boat, right? Is he the one who really is pushing back on this idea that maybe they have to be more hawkish than markets are currently pricing in?
Torsten Slok of Apollo. And I think he really owns this one at the moment.
Yes,
Investors have been underperforming their benchmarks because they entered 2023 underweight equities, expecting a slowdown that still hasn't happened. The title of this research, Tom, is From Hard Landing to No Landing. It's that no landing theme that I think has maybe got legs after that payroll report Friday.
This is the theme into the weekend is everybody humbled gets out in front of Valentine's Day inflation report. I don't have any words of wisdom on what the bears should do, what the bulls should do, but everybody's going to recalibrate with a vengeance. And frankly, John, the year starts March 31. Maybe February 14th is the new March 31.
Yeah.
Or I should say the 15th is the day of recalibration.
I think if you had the chance to rewrite your outlook, be markedly different to what you wrote maybe in December. Let's get straight to it. We've got a great guest with us. Equity futures look like this on the S&P. We are negative after a day of gains yesterday, which snapped a two-day losing streak. We're down about a third of 1%. Lisa, yields are lower by 2 or 3 basis points. Your 10-year, 364.72.
So Tom asked for it. Let's deliver all of the Fed speak. We'll line it up. New York Fed President John Williams, Fed Governor Lisa Cook, Fed Vice Chair for Supervision Michael Barr, Atlanta Fed President Raphael Bostic, Minneapolis Fed President Neil Kashkari, and Fed Governor Chris Waller. Is that enough for you, Tom?
That's enough. Are we done?
That's all the people who are going to be speaking today. I am curious to see what the linear thread is. If there is a sense of going to 5.1%, 5.2%, Tom's growling. I think a lot of people are looking for this as well. We're also looking at the political tour.
That was actually a growl.
He actually growled to me.
Fed speak.
Yeah, but maybe he's getting a little bearish. So I'm looking right now at what we hear, not out of President Biden as he goes to Wisconsin, but in particular, Janet Yellen visiting a battery factory over in Tennessee, and Commerce Secretary Raimondo in New York talking about what we're doing with semiconductor. Wow. manufacturing incentives and how that could potentially push the chip sector. I'm just going to keep powering through. Earnings. We talked about Uber. I'm just trying. My goal is just not to be derailed. Uber shares. Let's take a look at that. Up 8.5% after delivering better than expected earnings, not only for the fourth quarter, but expected. The EBITDA for the first quarter is expected to be more than people had expected. I'm curious when we get lift later in the week, John, how much is this consolidation of market share and how much is this that people are still willing to pay a lot of money to get from one place to another?
How viable are these businesses? And not just off the back of the zero interest rate change, but also off the back of what's happening with wages too. We've talked about this a lot.
Yeah, based on the fact that you're going to have to deliver higher wages to the drivers, at what point does it become feasible? Well, the results seem to suggest there's still some sort of, gas left in the tank or, energy left in the battery.
Sure.
I'm just going to let that go.
Nice
Let's move
one.
on.
That worked.
Thanks, I tried.
I promise never to growl at you, though. Sarah Hunt with us, partner and chief market strategist at Alpine Saxon Woods. Sarah, this is great. Thanks for being with us.
Good morning.
Can I just start with that line from Torsten Slot, because I saw you at the corner of my eye, just sort of nodding along with it. What do you make of that?
Well, I think that, we've all been anticipating such a big change in earnings and everything else. And the fact that we're not getting it, you're not seeing it in earnings, really begs the question, what does that mean? Where do we go from here? And I think that his phrasing that way also changes the discussion a little bit, just because everyone is waiting to see how bad things are going to be. And I think that what that is implying is, hey, right now it's really not so bad. And this whole idea of which way we're going to land, it's like maybe we've already landed and maybe it's not such a big deal. Maybe it is. Maybe we double dip later. Maybe inflation picks back up again. I think the markets wouldn't like that. But when I listened to Jay Powell's speech the other day, I thought, how I learned to stop worrying and love the stock market rally by Jerome Powell, because it really seemed like all of the things that he had been doing prior in terms of we need tighter financial conditions. We need this. This is not good. The equity market rally is not working. It seemed to be we shifted, and all of a sudden the market was like, well, if he's not going to be yelling at us, then maybe it's okay for us to keep going the way we're going.
The punchline here is last year was the worst year since 70 this, or in the bond market 1788 or the 1930s. Who's keeping score? And you hit the ball out of the park, over the wall, hit the cask and flagon across the Mass Turnpike. I'm doing it for Marty Walsh, John.
Keep going.
And you were down way less than you were down, but you were down way less than everybody else. How do you switch to a bull? I'm looking at the value line geometric index, and it's giving me signs of life. How do you switch to greater optimism?
Well, I think that, obviously for different people, you have different strategies. And so being able to deal with stocks last year that were good cash flow perspective, good balance sheets, good dividend payers, good buyback prospects that weren't just buying it back just to get the share count down, that worked really well last year. And this year, I think everybody came out of the gate expecting a bad year. I mean, we were already thinking that the pain trade was higher, but not this much higher and not this quickly. And I think that right now what's been running is a lot of stuff that I'm not so in love with. I don't think that you want to own the stuff that's high beta necessarily and that is more of a rebound. But I also think that you're going to get more fundamentals are going to matter again later in the year. And you've got a snapback in technology. Everybody was underweight, right? So you come out at the beginning of the year and all of a sudden it's not so bad and people are just chasing stuff that had been beaten up really badly last year. But you already see some valuations that seem very high to us.
Well, how do you parse out what's fundamental and what's technical? And then whether you want to lean into the technical because there's more juice to run?
That is a difficult question. We try to stick with fundamentals because we're basically a fundamental shop, right? So what we're looking for is what is the prospect in an economy that may or may not be acting as well as people are expecting right now as we get through the rest of the year. Because I don't know that inflation is a one-way trip up and a one-way trip down. I don't think that rates are a one-way trip up and we don't pause, we just go right back down again, which is sort of what the market keeps implying. I think we get stuck at a higher level, and I think that over time sort of roots out some of the folks that really need money to survive and didn't have to borrow yet, but are going to have to borrow at some point.
Best chart I saw yesterday, Lisa, was from J.P. Morgan. Zero Hedge had it at the bottom of their afternoon report, was how lonely the equity bulls are. I had no idea how unloved the stock market is. It was a really sharp chart.
And you felt like connected with them. And
no, I don't have an opinion on it. I just think it's something I wasn't aware of the level of gloom that's out there.
Well, at least in the stated level, although perhaps people are trading somewhat differently. I'm curious, Sarah, just to sort of wrap up, you talked about how valuations are starting to look high. You don't want to lean into that, but there are other areas that look good. What looks good? What are you bullish on?
So if we don't have, if the economy really is getting better to the extent that people are excited about that, then I think that things like energy can work really well They're going to be very lumpy, though, right? Because China's reopening. That makes a big difference. And this whole discussion last night in the State of the Union address, it's like, how much longer do we need hydrocarbons for? I would argue it's probably longer than a decade. And I think that there is a demand situation and a supply situation there that is not going to be resolved in an easy way. So we like that longer term, but there are definitely going to be entry points and exit points. We think defense stocks have gotten beaten up pretty badly on this whole argument about whether or not we're going to supplement more in the Ukraine and whether or not there's going to be a budgetary issue. I think a lot of that budget's already baked in. So I think there's some opportunities there too. And I think some of the older school economic, the old school, the old industry stuff, if we're really going to start reshoring and we're really going to start rebuilding in the U.S., then I think that you've got some real opportunity there for companies that play into that.
It's funny we're talking about reshoring at a time where a lot of investors here in America are starting to think about sending money abroad. Can we finish on that? Baidu is up by 109% since the end of October. Can I just get your thoughts on the rally that we've seen in some of these Chinese tech names?
But the Chinese stock market also got crushed by the Chinese government,
Absolutely.
right? So there's a rebound here, and there's also what seems to be a relaxing on the government's part of not going after these companies the way that they were going after them. So you start to say, okay, if the government's going to back off a little bit, then there's some room for them to run. But you don't have as much information on them as you do. That is definitely a snapback play.
A massive snapback.
Yes, and how long it keeps going, I couldn't tell you.
I've got no idea either. That's why I asked. Sarah Hunt of Alpine Saxon Woods. Sarah, thank you. It's great to see you. What a rally we've seen, Tom, with some of those names.
Yeah, well, in China, yeah, absolutely. And again, really off the mat as well. I wonder how they're going to bail out the real estate market. To me, there's always a circle here where the Beijing, as a generalization, filtered through the major cities, bails out real estate. It's, I don't know the details other than there it is every time. When's that happen?
Well, you get the snapback in growth off the back of reopening. It's very mechanical. You go from shutdown to reopening. That makes perfect sense. And then you've got the same structural headwinds, which are going to question how durable that rally we might see or that expansion in GDP growth, the acceleration we might get to.
Although I wonder if those Chinese tech stocks, they just mentioned ChatGPT.
Oh, yes.
Shares
AI.
just go crazy.
AI, and it's just like, bye.
Seriously, disinflation,
Bye-bye.
AI, absolutely.
Nuts.
Gangbusters.
Futures down 0.25%. Lisa Shallard of Morgan Stanley in the next hour. Looking forward to that conversation. Anne-Marie down in Washington coming up.
Keeping you up to date with news from around the world. With the first word, I'm Lisa Mateo. President Biden's State of the Union address foreshadowed what could be his re-election stump speech. The president highlighted accomplishments on infrastructure, climate, and consumer protections in his first 2 years in the White House. But there was heckling from Republicans on Social Security and Medicare, the border, and other issues. Turkey has begun to deploy thousands of soldiers to areas struck by 2 massive earthquakes. They'll help in rescue and recovery operations. The death toll in Turkey and Syria has now gone over 11,000. Searchers are still pulling survivors out of the rubble. Ukraine's President Volodymyr Zelensky is in London today to meet with Prime Minister Rishi Sunak and later King Charles. Among other things, Sunak will offer to expand training to include Ukrainian fighter pilots. Zelensky will speak to the House of Commons at 8 a.m. New York time. Bloomberg terminal users can watch the speech on LiveGo. The pharmacy giant CVS is pushing deeper into healthcare. The chain has agreed to buy Oak Street Health in an all-cash transaction with an enterprise value of about $10.6 billion. Oak Street aims to reinvent care for Medicare patients with low incomes and chronic health problems. CVS says the deal will increase healthcare access in underserved communities. And the service that soared during the pandemic is now adapting to slower growth. Zoom is eliminating 15% of its workers. That's about 1,300 jobs. CEO Eric Yuan says the company's headcount tripled in 2 years. Yuan is reducing his salary and will give up his bonus. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
My Republican friends, if we could work together the last Congress, there's no reason we can't work together and find consensus on important things in this Congress as well. Let's remember the world's watching. Putin's invasion has been a test for the ages, a test for America, a test for the world. I'm committed to work with China where we can advance American interests and benefit the world, but make no mistake about it. As we made clear last week, if China threatens our sovereignty, we will act to protect our country, and we did.
The State of the Union address from the President of the United States. Some highlights there for you. We get some more in just a moment. From New York, this is Bloomberg. Alongside me, Tom Keene, Lisa Abramowicz. I'm Jonathan Ferro. Equity futures right now down 1/3% on the S&P 500. Yields lower by about 3 basis points, 364. Some earnings behind us already. Uber, Lisa, pretty decent.
I mean, this to me is such a shocking response that you're seeing in stock markets where you're seeing shares up more than 9% at one point, not only beating on fourth quarter, but also projecting out in the first quarter better than expected earnings, which to me is just amazing considering that people left this company for dead.
Such a pain trade, isn't it? Some of these moves we're seeing, not just Uber, but let's just take the NASDAQ, make it easy. The NASDAQ's up 16%. Was that in any of the outlooks? To close out 22.
Yeah. Rip-roaring rally in NASDAQ stocks and all the big tech stocks. And the companies that actually don't have profits are the ones that are doing best. Again, this doesn't make sense unless you're going back to a very accommodative world. So are people expecting we're going back to that? Or are people just going, la, 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 let's buy what we don't have?
I would suggest corporations clear problems. Uber is a poster child of that. I don't know the details. Of course, I don't own any of the shares. I'm looking at the ANR 43 buys, 5 holds, 1 lonely sell. Mark Mahaney, who I adore over at Evercore ISI with Ed Hyman and Julian Emanuel. John, his target moves from a 35, trading, as Lisa mentioned, now in the 37. And Mr. Mahaney has a 75 price target published on Uber.
There we go.
These are things that don't get talked about. The enthusiasm's there. Why is it? New management, the facts change, they change.
Just quickly, you asked about whether people would pay money to have an Uber deliver your salad. Evidently they do, and they will. And that's part of what's driving this, is that people are still paying for takeout. So again, the disposable income evidently still fueling a lot of the gains that we're seeing there.
Savita Subramaniam over at Bank of America, Jill Carey-Hill, both of them in the equity division, have written about this a few times over the last year, and I think it's really important. It's important we talk about these issues because that's where the money went in the last 10 years. We invested in things like that. We didn't invest sufficiently, in the minds of many people, in the old economy, Tom. And that's why last year it was all about big energy rallying across the board the year before as well, and why these names suffered. I think it's way too early, and I know you agree with this, to say that some of these themes are out of the woods and here we go, let's get on with business. It's going to be a tough time for some of these companies.
Although I do think that you're going to see more consolidation. And we're going to get Lyft later in the week. And I'm wondering whether you see some of the demand from Lyft go to Uber as the strongest one, Tom, really does take more of the market share.
I just think it's profit, non-profit. And granted, Uber's got an EBITDA flip here where they're getting to a better place. But that's about it. She owns a high ground on usage of Uber in Washington. Anne-Marie Horton joins us right now as we pick up the pieces from last night. Anne-Marie, we talked more about the economy in our last hour in the State of the Union. And what I found absolutely fantastic was the body language behind this aged president of the United States. The focus was on the speaker trying to corral his Republicans. We all know that soap opera. Silent in the discussion is this vice president. What was your thoughts last night of Vice President Harris's place in this pageantry?
Well, she stood up so many times as the president made his speech throughout the evening. Really important moments. She was on her feet, whether it was the economy, whether it was the president talking about abortion and the veto action he would take if any sort of legislation was to land on his desk. She was at her feet almost immediately compared to everyone else. And you juxtapose that to Speaker McCarthy, who was very polite. He did clap at a number of moments, but there were moments as well where he said that is not true when President Biden talked about the prior administration and the debt that they accumulated. There's a number of also moments, as you mentioned, Tom, when the speaker was trying to corral his the rebels, you could say, in his group. Really the standout moment that I think the press by large is leading with this morning. And this is what this White House wanted to see. It was when conspiracy theorists, an individual who socialized conspiracy theories, Marjorie Taylor Greene, a representative from Georgia, got to her feet and was shouting liar when the president was talking about the debt ceiling and how there has been some proposals. And the president was clear, this is not by and large all of you, But it's true. There was a proposal from Senator Rick Scott of Florida about sunsetting Medicare and Social Security. And this moment, the president showed he was willing to have this debate with Republicans right on the floor. And I have to say, Mitt Romney nailed it when he said, this is becoming more like the House of Parliament. In that moment, you felt like it was almost P&Qs for an international audience.
Anne-Marie, thank you so much for a birthday girl. Thank you so much for weighing in here. John, review this again as you did in the last hour.
You're going to get me in trouble. You're going to get me in trouble. This one, I'm going to say something that might be slightly insensitive, but here goes. This applies to both parties. American politicians are way too thin-skinned. Way too thin-skinned. When you think about the kind of back and forth that you see in Parliament, when I look at the vigour of interviews that take place between British journalists and British politicians, they are so much harder than what I see take place in America.
Yeah, I think you live that every day here.
They seem to be disarmed by the office that the individual sits in.
Although I'm curious whether the attacks, the personal attacks, are of the same nature or if it's about policy in Britain.
It's about policy, and I think that's a really good distinction, and I wish it was more about policy in the United States.
Could not agree more.
I wish we saw more of those exchanges over policy, and we don't. What we see, get off the phone.
I'm with Ken, the Yankees fan. I said cut him.
Well, you mentioned sports, so let's pick up on that.
Okay.
Politics in America feels like sports to me. You have various sports channels that support various sports clubs, and the individuals from the individual clubs go on their representative sport club TV channels, and that's all I see. That's all I see take place in the United States, in the media and with the politics.
A lot of people talking about the reality TV aspects of a number of different moments in yesterday's speech, and not least of which was liar, right? And this is really the question, which is, do you see a splintering between politicians that do want to talk about policy and then those that really are sort of appealing to the social media crowd and to the club?
Well, you mentioned social media. When you look at what happens, let's say Chairman Powell goes down to Washington for the semi-annual testimony, and you see a congressman, congresswoman make a point, and all they're really doing is trying to make a clip to put in a highlight reel to send out a video to their electorate. And I think that's problematic. When I look at the Treasury Select Committee with the Governor of the Bank of England, it's boring. It's all about policy. It should be boring. It should all be about policy, but unfortunately it's not.
Well, just really quick here, Anne-Marie, before we let you go, and I know you are standing out there in the cold, what's going to be most clippable from last night's speech?
I'm glad I set up a great debate for you guys in New York. That's my job. Listen, it's going to be the liar moment. That has already become, I mean, within 10 minutes, it was a GIF on Twitter. That was the moment that everyone is pointing to. And this is the moment that, talking to officials at the White House, they wanted this moment. The president looked nimble. He was on his feet. He was also very reasonable. He didn't start to shout. He said, I'm more than happy to converse with you. And then he nailed it when he said, I'm glad we are unanimous in this moment. So he's basically taking a little bit of a higher ground on the debt ceiling debate, and also showing to the American people you can have a reasonable individual, someone who doesn't go for the showman type tactics, or you can have a Republican Party that has a number of rebels. Now, obviously, this is just a handful of individuals. You had people like Senator Romney, who was appalled with some of this behavior. But to Jonathan's point, this happens all the time in other countries, and I guess for the U.S. it's something new.
Anne-Marie, thank you. Down in Washington, fantastic to catch up with you. MH on the latest, Tom, from the State of the Union. I guess looking forward now, it's about whether the president throws his name forward and says, let's go, 2024.
There's so many. The options here are extraordinary. And what I would suggest is, can you imagine the debates? When do the debates start? Like late fall, maybe?
I think they've already started. They're just on social media.
But, what is going to be? 8 people from each party, 16 people yammering here? I still like the British way better.
Just get it done.
Third week of August, let's go.
Seems to be more straightforward. Futures down 1/3% from New York City. This is Bloomberg. Equities lower, shaping up as follows. Down 1/3% on the S&P. On the Nasdaq 100, we look a little something like this. We're down a little more than 1/10%. The small caps, the Russell, down 0.5%. Into the bond market, off the back of Chairman Powell, yields still through 440, but they come in just a little bit on a 2-year, down 2 or 3 basis points to 443.96. On a 10-year yield, down 3 basis points to 364. 15, the curve inversion, 2s versus 10s, still in and around negative 80 basis points. Thinking about the ranges we've been through, we've talked about this a lot over the last couple of days. The 2-year, very close to 4% on Friday morning. It's up about 40 basis points since then. Think about euro dollar in the range we've seen in the last week. As high as 110, as low as 106, and right now, Lisa, 107.47.
And bouncing around, although a lot of people still seem to have some conviction that we're not going to see the dollar strength that we did last year, at least not in any kind of linear fashion. Taking a look at some of the names that have been reporting and that are moving in the morning ahead of the open. Uber shares, we've been talking about that. Those now up more than 7% in pre-market trading, $37.40, after reporting better than expected revenue for the fourth quarter, but also better than expected EBITDA estimates for the first quarter. And to me, the question is, how long can you get gains with respect to ride-hailing services and food delivery at a time where supposedly consumers are going to be pulling back? It doesn't seem to be happening yet. Revenue rose 49% in the fourth quarter, just to give you a sense. Meanwhile, Under Armour shares up 8.4%, raising its profit forecast. The holiday season was strong. Again, is this a retail story or is this a bifurcation between Under Armour, the direct-to-company kind of sales, and the Macy's, the other department stores that aren't maybe getting some of those sales? And this is what people are parsing through. Chipotle shares down almost 5%. It's kind of a mixed bag here. It was weaker than expected earnings with respect to same-store sales growth and the margins, but a more constructive tone for the first quarter. So hard to really parse out. But John, I mean, honestly, the earnings have been pretty dramatic in terms of spurring a response in markets based on a beat or a miss. But then it all fades. And actually, after a couple of days, if you have missed, you actually see the shares rally again. So it seems like it doesn't really matter.
Are they struggling with costs still?
Chipotle? They said that they did see margin compression in the fourth quarter, but they did seem more constructive going forward. It's a tricky time because you're seeing disinflation in food, which should be a good thing, but it's actually proven to be a little bit more complicated for some of the restaurants.
And the labour issues as well at the restaurant level. Tremendously difficult. The Fed's got to do something about this, apparently. Fed speak today. Williams Cook, Bar Bostic, Kashgari, Waller, all on the docket. Bramo's gone through the Times, just tons of it. Ed Al-Husseini of Columbia Threadneedle weighing in on the Fed's path forward, saying this: real rates across the curve are significantly above 21 levels, and markets are pricing monetary policy to be restrictive well into 2024. In my view, this increases the odds that the Fed will be pivoting to a pause in March. Drumroll TK, there's a call.
Some adjusting, and Ellen Zentner at Morgan Stanley adjusting just in the last 24 hours. We'll have to see where that goes. This is an important and timely interview on where we are and what we're going to do in economics. Ed Al-Husseini is with Columbia Threadneedle. He's senior interest rate strategist, but his path goes from Colgate University, where it was 20 below zero a few days ago. That's how you do math and economics at Colgate. You can't go outside. And on to Harvard with a guy named Summers. Let's cut to the chase on the quality of disinflation you see now really worldwide. This is a major debate now into the inflation report. Is it a 70s fear? Is it a Korean War rapid disinflation fear? Or is there something else going on that Columbia Threadneedle sees?
I'd say there's something else going on, and that's really the centrality of the labor market to the inflation story. And I think that the Fed's done a really good job of putting it there in the course of the last year. We're seeing, particularly in the elements of the labor market that are important to inflation, that's wages, we are seeing a pretty rapid decline in the pace of wage growth without damaging the core of the labor market in terms of employment. So that's a really good disinflationary momentum story in my mind.
What does the Fed do? What are the signals they do to get this right? Not to the next meeting, but over the next 3 or 4 meetings.
I think they're doing what they can, which is you got to stay flexible, right? I think in yesterday's interview, the most telling part of the interview was Powell telling us, look, the data can only get you so far. You've got to have a story, and you have to have a story and a narrative around what's driving the inflation process. From the Fed's perspective, again, go back last several decades, there hasn't been a stable story around what drives inflation. They change it quite frequently. They changed it very aggressively last year. And this year they have to be prepared for some surprises.
Although, do you think that there's some story behind the change in tone from Jay Powell?
Consistency, I would say. Look, they started messaging the arrival of this pause, the transition from raising rates to pausing. They started messaging that last fall, right? Last October. It's been a very consistent message. They remain on that message, despite data surprises. And I think nothing's really changed that trajectory in my mind.
Right now, we're looking at a number of stickier elements of inflation, and there's sort of this bifurcation between the services side and the goods side. How do you parlay that into a view on how long the Fed's going to have to keep rates at 5%, 5.1%, as the market is sort of seeing the terminal rate?
Honestly, it's impossible. No one can tell us that conclusively right now. Is it possible that after some pause, the Fed will have to raise rates again, make some adjustments higher? Absolutely. You can't take that off the table, right? Is it more likely that they have to adjust rates lower, either whether it's to neutral or potentially much lower in the event of a recession? Absolutely. I think in my mind, the odds skew in that direction. The timing of this, it's hard to say.
You sound like you need more data, except people have to invest now. Yields are doing odd things. Where on duration, where on quality is Columbia Threadneedle?
We're up in quality. I mean, look, if you look at credit spreads have compressed quite significantly in the course of the last 3 to 4 months. Inflation and rate volatility has come down, and that's been a massive tailwind for risk. And we see that, now potentially we might see that volatility go sideways, potentially a little bit higher as we get some surprises. So valuation in credit is
right.
I think not super attractive.
What's your 2-year bet here, though? I mean, on a single point basis, let's play your market economic strategist here. What's your two-year yield bet?
Look, when I see twos approaching 450, that's a very attractive level for me. I think we can have an argument inside of twos in the Eurodollar space, whether the Fed, markets are underpricing the pause, underpricing the terminal rate. Those are pretty small elements right now in the story. We're not moving in 75 basis point increments anymore. 2-year yield at 450, that's pretty attractive.
4.44%.
Pretty close to that level right now, yeah.
Get my buy ticket.
There's an issue, Ed, as we look forward to the U.S.-Europe divide. And people have been betting that Europe will actually be more aggressive with rate hikes and will be a more successful economy relative to expectations this year. Based on positioning, has that story been told already in the price action?
Not yet. I would say there's still room for European rates to underperform the U.S., just based on the fact that the European rate hiking cycle is significantly behind the Fed's. And if you look at the consumer space, the U.S. consumer is softening, perhaps a little bit faster than the European consumer. And particularly expectations, if you look at expectations for growth in Europe, they really hit the floor at the end of last year. And so if you look at where there is room for inflation and growth expectations to be revised higher at the start of this year, Europe is it, much less so in the U.S.
So do you think that it's time to actually lean into the euro versus the dollar, to lean into international, the story that everyone's been saying since the beginning of the year?
Look, the euro's also gone a long way. I like the yen story a little bit better, from a valuation perspective and in terms of some surprises from the Bank of Japan. Right? If we're talking about where we are in the tightening process globally, the Bank of Japan's done very little to nothing at this stage. So to the extent that there are some surprises there, wage growth, inflation moving higher in Japan, to me, is a much better backstop to the yen than the euro.
Before we let you go, let's double down on that, because we really haven't talked about that. Wages coming in, the wage increase in Japan at the highest pace going back decades. This idea that there was some rumor of a potential successor to Kuroda that was then, questionable, but that he would stay the course. What is the bet that you think is actually least vulnerable to some sort of whipsaw there, based on the potential for a real market shift that a lot of people say is inevitable?
Look, I think you can be both short rates in Japan via futures. You could be long the yen versus the dollar or versus some basket of developed market currencies. Both of them are quite attractive. The question is timing and how much premium are you burning? How expensive is that bet to hold? I think obviously being short rates is a little bit more expensive, but I think both are relatively attractive. That particularly if you look at it versus duration in the U.S. If you're long duration in the U.S., being short duration in Japan is a lot less painful from a cost perspective.
Ed, thanks for being with us. Great to have you with us in the studio.
Thank you.
Thank you, buddy. Ed Al-Zeni there of Columbia Threadneedle. Looking ahead to the BOJ's last decision with Governor Kuroda too. What's that, Bramo? A month away?
Yeah, and then who's next, right? And there was a rumor that it was going to be one of his deputies who was, very much going to continue his policy, and other people saying it's impossible. Look at the wage gains that you've seen. Look at the actual inflation. They're getting what they wanted. Aren't they going to have to push back at some point?
It's going to be really interesting to see the inflation dynamics in Japan. To me, it's not something in the textbooks. This is a managed reflation. Reflation's a really odd concept, and at the minimum, it's original. There's no like data dependency or ex post or ex ante. It's just domestic policy to avoid 20 years of some. Martin Feldstein was brilliant on this.
Let's use that
Late
word
Martin
managed.
Feldstein.
It's a managed market too. We're going to step away from that. They've gone so much further than other central banks have.
Well, and the debt ratio, somebody had out the comparative debt ratios today, and we forget where the Japanese are. It's going to be sport.
Don't they own equity ETFs over there at the BOJ as well?
They own something
Do
like
they? I didn't know that.
60%.
Is it
Yeah,
60%
it's something insane. It was
I-
a bunch of years ago.
When they're trying to coerce certain companies to get in that index, to do certain things and change the behavior.
It's not a market. They own the market.
Certainly not a market.
So then how do they become a market, right? Do they become a market? Or is
There's
it just
no
sort of be a
evidence they
managed
ever
kind of...
have.
Yeah, and there's no evidence. And to be honest, when I speak to some investors who are invested in Japan, they're not counting on any kind of quick shift because they say this is not a regime that likes
We're going
quick
to allow some
changes.
price discovery, but just a little bit.
Exactly, and then we'll
On
tamp
that
down.
note, can I give you a bombshell?
Please do.
Speaking of Discovery, Warner Brothers Discovery completely backs away from the blah, blah, blah of the last 6 months. John, you're better at this than I am. They completely capitulate from the we're going to combine everything together. And this, the Wall Street Journal has this Jessica Tunkel and Joe Flint. And the basic idea is they're going to keep apart HBO and Discovery. They
Interesting.
just completely walk away from all the synergy garbage we've heard for a year.
What do you think's behind that, Tom?
They looked at the number, they did research on the number of people that are saying no to their folly. That would be my guess.
And the
I
latest
defer to
headline
Mr. Sweeney on that.
from the Journal just moments ago. Is Paul in today?
He's
We'd
got
love
all
Paul's
my
thoughts on
vacation.
that.
He's got Ed Hosseini's vacation days.
That's rude.
I know it's rude, but that's what Sweeney would do.
Ed, thank you, mate. Thank you very much. Setting up the conversation to continue with Bill Dudley, the former New York Fed president, and now, of course, a Bloomberg opinion columnist. He'll join us in about 50 minutes' time.
Oh, good.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. In his State of the Union address, President Biden called the Russian invasion of Ukraine a test for the ages. And it's a test he says the U.S. and its NATO allies have passed. Meanwhile, Ukraine President Volodymyr Zelensky is in London, where he met with Prime Minister Rishi Sunak. He'll address the House of Commons at 8 a.m. New York time. Bloomberg terminal users can watch that on Live Go. Turkish President Recep Tayyip Erdogan visited the disaster area today that was struck by two powerful earthquakes on Monday. Tens of thousands of soldiers are helping with search and rescue efforts as the death toll in Turkey and Syria pushes past 11,000. Many people are still trapped inside buildings damaged by those quakes. Meanwhile, Turkey's stock exchange has suspended trading for the first time in 24 years. A sell-off after those two quakes erased $35 billion in value from its main equities gauge. No word yet on when trading will resume. Credit Suisse is adding to turmoil in how the firm handles employee compensation. Bloomberg's learned that the Swiss lender will pay bonuses in installments to some of its junior and mid-level bankers. Credit Suisse is overhauling operations after a series of scandals and deep losses. In the NBA, Los Angeles Lakers star LeBron James has broken the league's career scoring record. His jump shot against the Oklahoma City Thunder eclipsed the mark of 38,387 points that was set by Kareem Abdul-Jabbar. Now, tickets for the game sold for as much as $80,000 in the secondary market. Crazy. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
We would fade this latest rally. We still think it's probably a bear market rally, a la, 4 or 5 of them in 2022, and probably fails into resistance and eventually comes back down before you move higher. Earnings growth is just now turning negative, right? In the last 20, 30 years, we've only seen that happen 4 times. Every time we've seen it happen, it ends up being a recession.
There are certain strategists, investors I could listen to forever. Davil Kronk is one of them. Such a calm voice when he talks about markets. Of Wells Fargo Wealth Management. Just great to catch up with him yesterday. Futures right now down 1/3% on the S&P 500. Yields look a little something like this, down a couple of basis points on a 10-year to about 364.72. Not much going on euro dollar, but crude making a move again, up 0.9%, Tom, $77 and about 80 cents.
It's going to be interesting to see. And, within the data, John, I'm still looking at a highly accommodative trend off of Bloomberg Financial Conditions Index. We haven't talked about it this morning, but 0.30 has become a positive 0.42 standard deviations. I haven't done any technical work on it, but the trend's in place away from restriction.
The exchange between Chairman Powell and David Rubenstein was thoroughly entertaining yesterday. Just one regret. I wish that was something we just pushed on a little bit more. How does he think about financial conditions? What goes into, we look at the Goldman Index, we look at the Bloomberg Index. What does he look at?
Right.
I think Chicago Fed has an index as well, right?
And there's
what does he look at?
And there's also the bank tightening or loosening of lending standards, right? Which some people have been pointing to that you have seen a tightening. Do they look at that? Is that something that they put more emphasis on? That reaction function, I mean, what did Sarah Hunt say? How do you learn to love the stock market rally? It seems like that was sort of the takeaway. And he didn't push back on that.
What was your message yesterday? The courage to be bearish. To be bearish?
Yeah.
How brave do you need to be bearish into Fed speak like that?
Well, pretty brave, actually, because he's not going to push back. He's not going to actually say, you know what, guys, please, I need you guys to actually sell off for us to transmit our policy.
That's the biggest change, I think, from now and in Jackson Hole, Tom, and for much of last year, for that matter, too.
Yeah, and we move forward to the huge number of speakers today. Do we know what time William speaks? Is it 9-ish?
9:15.
Yeah. So are we taking it, or what are we doing with that?
I think it's a Wall Street Journal.
But you'll have the headlines.
I'll take the
headlines.
headlines.
You'll have the headlines and all that.
Mike McKee will bring you some context, and he'll listen in, hopefully.
Okay, let's do this.
Make that happen.
Let's say that today is important, and we have the right person to talk to. Long ago and far away, there was a hope and prayer that the Roberts family of Philadelphia would somehow invest $1 gajillion, and at one point, Comcast would go cash-free positive. And I remember that day, that quarter report, where they flipped into what the hope and prayer would be. Mandeep Singh from Bloomberg Intelligence on this day for Uber. Is this the Comcast equivalent for Uber, Mandeep, where they finally go to a vector that says cash flow positive?
I think so, Tom. And I think things are aligning well for them in the sense that you have a nice tailwind from reopenings, international travel. And look, I think Uber, we know anytime a company is a verb, they tend to do well. They have those network effects. And it shows up in this print where mobility segment growing 37%, at a $14 billion one quarter run rate for mobility bookings. It's pretty impressive, the fact that they continue to grow at this pace. And inflation seems to be a nice tailwind for this company, unlike in a lot of other cases where you could argue, inflation may lead to some price elasticity, and that we are not seeing that in Uber, and I think that bodes well for this year.
Your colleague in crime, Anurag Rana, talks about the addressable audience 5 years out for the cloud business. Is that the same way for Uber and their arch competitor Lyft? Is there like a future audience out there like the cloud for the driving car business?
Well, so consumer tech businesses are very different. And in this case, I think the way to think about it is all the, startups that were coming up with new ideas to subsidize this market and, attack a niche, they're going to fade away because the spending environment, the VC spending has changed. And to me, that is a sign that it will be, one or two companies in this space, which is great for this market. I think it should be a duopoly like, a FedEx or UPS. They're never going to get to the margins of software or digital ad companies. I don't think that will happen with Uber and Lyft, but at least, you can see them getting those scale and network effects. And that is what will drive profitability and free cash flow.
One cliche coming out of the pandemic was that suddenly people were willing to pay $10, Mandeep, in order to get a salad delivered to them or a sandwich. And apparently they still are, because their Uber Eats unit actually delivered a greater profit than people had expected and accounts for 47% of Uber's overall revenue. How long can that continue into what some people still think is a slowing economy?
Well, so there will be that cyclical element. And look, I think if there is a recession or, some sort of a slowdown, people will pull back. But again, I go back to my point about marketplaces are all about supply. If you have the most supply, ultimately, you have to adjust your pricing, but volume may go down here or there, but you will continue to be the place where, everyone comes in, both from a consumer standpoint as well as a supply standpoint. And that's a great position to be in. And I do think, Uber being that verb that everyone has, on their phone or the app that, you're unlikely to delete, where you will bundle everything, you need from a ride sharing or delivery perspective, is a good position for them.
Mandeep, you keep touching on consolidation of market share, right? And whatever business you're in, if you can consolidate this, then you can win regardless of the cyclicality of a business. How much is Uber really standing out as not necessarily a part of a duopoly, but more than that? How much are they going to cannibalize from Lyft's earnings that we get later in the week?
I think you will see the pressure of, from cash burn for a company like Lyft, which has to show profitability, has to show free cash flow, and it has to come at the expense of expansion. So Lyft, for example, can't invest as much in supply acquisition as Uber can, because Uber has the scale and, it can figure out the geographies they want to focus on, the profitable ones. Whereas Lyft is at a point where it has to show incremental free cash flow, improvement. And that is a hard position. I mean, DoorDash is somewhere in the middle, but that's what I mean by the smaller vendors, like Instacart, like GoPuff. I mean, there were so many vendors. There was a time when, they were attacking these niches, and that I think will fade away. And you are at the point of consolidating all types of delivery, whether it's grocery, food, any sort of convenience delivery. And that is a good spot, for the companies with scale.
Mandeep's right. You Google, don't you? You don't Bing. Isn't that the story here?
They're actually trying to change that now with ChatGPT.
They've been trying for 30 years.
Do you ever say, call the Lyft?
Right. It's you Uber somewhere,
yeah,
and it's
Uber
becoming a verb.
You Uber on Lyft.
Yeah.
You Google, you don't Bing.
Right. Yeah.
What is? Do you Bing?
I don't know if that means the same thing, but I do think.
Thank you. Yeah. Anyway, let's park that. Mandeep Singh. You're killing me. I wasn't even going there. Mandeep Singh of Bloomberg Intelligence will catch up with Malaysia. This is lost on Tom. Thank goodness. Lisa Shallett's going to join us shortly, Tom, from Morgan Stanley, to talk about this market. How about that market? Futures down 0.5%.
John, an image from the United Kingdom through a window of war. There was a direct hit on Westminster Hall and the House of Commons, and the window was torn out as 3 people were killed in 1941, and there's going to be a discussion of war today in front of the British elite in the same historic hall where the funeral was for Queen Elizabeth.
Yeah, oldest building in the parliamentary estate, I think, Tom, that you're looking at right now. Look, this is an interesting time, isn't it? Because Zelensky did all the tours of Parliament that you can think of in the last 12 months. And at the time when it first started, each and every single one of them got a ton of attention. Tom, I have to say it's getting less and less attention at the moment.
I agree.
And in the United States, I think the story will be focused on this year is how much unity there will be down in Washington to carry on supporting this war effort, because it is check after check after check. And I think the Republican parties are pushing for a little bit more oversight, Lisa, on that effort.
Well, especially after the reports of certain types of malfeasance among the leadership that have since been fired in Ukraine. But this really does raise a question. How much longer can the aid keep coming at a time where Vladimir Zelensky is saying this is actually the key time to get ahead of the Russian offensive before the winter's over?
I went back and forth with Maria Tadeo, who's really on top of this story, and she said simply, get out the calendar. It's just that simple. And it's like, frankly, John, it's like every other war, including, World War II and what happened to the House of Commons. Then there's a spring offensive, and spring is upon us. We're seeing that in New York City.
I can't believe it's been a year.
You can't believe it's been a year.
Can't believe it's been a year. And Tom, you've seen this in conflict after conflict. The longer it goes on, you start to get this fatigue outside of where the conflict is taking place. And inside in Ukraine, clearly, there's no fatigue there whatsoever. That's the urgency and the immediacy of war.
They're defending their home. So it's not exactly fatigue. It's we got to get through this, which is really the message that you keep hearing.
The rest of the world just doesn't seem to have quite the same urgency as it did maybe 9, 10, 11, 12 months ago. Equity futures right now down 0.4% on the S&P. Looking forward to catching up with Lisa Shallett over at Morgan Stanley Wealth Management. We'll do that in a couple of minutes' time.
The the spending slowdown is continuing. I think these hiring freezes, cutbacks are continuing.
There's some areas of the economy that are really, really slowing pretty quickly.
If the data surprises, you're just going to get a more hawkish Fed.
If we continue to see interest rates remain high, I think all valuations then would be at risk of rolling over.
We would fade this latest rally. We still think it's probably a bear market rally.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Good morning, everyone. Jonathan Ferro, Lisa Abramowicz, and Tom Keene on radio, on television. We're going to fade the hour for you with 422 Fed speakers today. Only Bullard of St. Louis is not speaking today. We staggered at 9 a.m. and we're going to hang on every word of Williams of New York.
Of the New York Fed, that comes at 9:15. I think we all wanted to know how this Federal Reserve would respond to that blowout, monster, upside surprise payrolls report on Friday. We got an answer from Chairman Powell. For Chairman Powell, it validated the current Fed stance. It didn't change it. And that'll be news to people, Tom, who were looking for some pushback. We didn't get any. And this market rallied pretty hard into the close yesterday.
The character into the close yesterday, exactly right, John. I see it with the VIX 18.90. And we really don't pull back today. And it's just a market. Maybe it's a wall of money that just needs to go somewhere.
I know this is stating the obvious. It's all about the data now. I think in the last 12 months for this market, if you rallied too far, you ran the risk that the Federal Reserve was going to lean against financial conditions. They were pretty clear about it. They didn't want equities higher. I think Neil Kashkari even said it to Joe Weisenthal and Tracy Alloway on their Odd Lots podcast. They didn't want that to happen. Now it seems to me that we can rally and Chairman Powell's not pushing back too hard. We are just at the mercy, Lisa, of the incoming information, and the next big print is next week.
And this is the reason why perhaps people are rallying on his comments, because perhaps Fed officials don't necessarily see market activity as part of their tool to distribute monetary policy to the same degree. That said, just to give you a sense, Tom, of how difficult it is to gauge inflation, used car prices were one of the biggest drivers of disinflation last year. Now they're popping back, and this has to do with the compositional effects of leased cars that didn't necessarily make it out because of some of the distortions of the pandemic now not being sold in the fleets. But either way, it's really notable.
I'm going to go to the great David Rosenberg, who invented this at Merrill Lynch years ago, where you parse and look at all the inflation, but at the end of the day, you have to aggregate, which is the importance of the month-over-month statistic that we're going to see February 14th. I mean, it's just, to me, there's really no other data point. Mortgage applications, John, came in positive.
Oh, did they?
I don't know what that means.
That's actually interesting.
Did things pick up
Why
again?
is that interesting?
Neil Datta of Renmac is making the argument that maybe things start to pick up again, Lisa, and you've seen that in payrolls, you've seen that in the non-manufacturing ISM. You run the risk. I say run the risk. The Federal Reserve, it might be a risk to them of it happening elsewhere too.
Well, if you have mortgage applications starting to pick up, this is basically a symptom of rates coming down and people flooding back in. The weakness hasn't really been there. It's just been people looking for a better entry point. And that's the issue, right? People thinking, okay, well, if financial conditions soften just a bit, ease just a bit, well, then all of the dynamism that you see for all the pent-up savings will flood back into some of the areas that have disinflated so far.
The disinflationary process has started, according to Chairman Powell.
In goods.
In goods. That was a qualification yesterday, and maybe that continues. Maybe it doesn't, because we barely talked about China reopening, Tom.
Well, yeah, with China, you mentioned Baidu earlier with the moonshot, and I just think there's all this mix. We're going to talk to Lisa Shallett about this in a moment. We're just, as you said, John, we're hanging on the data, including Michigan on the 10th, onto the CPI data as well.
You, Mitch. Did you get the phone call? I'm not sure when the survey is.
No, I didn't get the phone call, but, 5 to 10-year inflation off the Bloomberg terminal is 2.9%.
Yeah.
That's called disinflation.
That's called calling 500 to 600 people and saying.
Who do you think is most likely to get called between the three of us?
TK.
Why?
TK gets the call. He'd keep them on the phone for so long. Can you imagine? I just want TK to get the call just for my own entertainment.
He knows.
And I wanted to record it.
With a camera,
I'm the only one with a little home.
Amazing.
Lisa, I have the phone that it rings.
Do you understand about the history
dial.
of inflation expectations? Can I tell you?
Yeah.
Where it comes from?
Yeah, that's what Tom's going to say.
That's how the phone call
the
would
rotary phone.
Can you just pick a number, sir?
He's like, let me lecture you. Where'd you go to school?
I'm not going to guess, but
let's save ourselves.
Futures down half of 1%.
John, a data check. We're back down to 80 basis points, 210 spread. I'm sorry, bond market's talking. That was interesting with Ed Hosseini about the 2-year yield, 4.45%.
Yield's down a couple of basis points, Tom. 365 on a 10-year. Still looking at 440-ish on a 2-year. Equity's a bit softer, Tom. We're down 0.5% on the S&P.
A joy. She is Chief Investment Officer at Morgan Stanley Wealth Management. Lisa Shallot here, knowing that things have changed. There is a yield, and that means cash has value. Lisa, we were talking before the show about you're outside a prospectus where you've got maybe 10% cash, whatever that movable feast is, to portfolio. But the Morgan Stanley audience wants to hold more cash than that. Why?
Well, look, I think that there's a huge amount of uncertainty out there. I think that we've been cautioning against the fact that we think that this is yet another bear market rally, that if we were going to really materialize a soft landing, we would not be seeing negative earnings and year-over-year compares, and not negative earnings guidance and negative earnings revisions. So, I'm heartened that maybe our clients are taking our cautionary view to heart. They're also embracing for the first time in, literally 6, 7, 8 years, a livable fixed income yield, meaning net of the expected inflation by the end of the year, which may be sub 4%, gives them a positive real yield, and they don't need to take any duration risk. So, we've got folks piling into things like certificates of deposit, like money market funds, which, I know in many eras were not considered sexy products, but are satisfactory for a lot of investors right now.
Lisa, do you think that's wise to take on a product that maybe you have to think about where to deploy capital in a year or two, where yields just aren't at this level? Lisa, how do you advocate for taking maybe a little bit more risk, maybe taking on a little bit more duration, but locking in these interest rates for a whole lot longer?
Yeah, so look, I think that there's an argument there. The problem is right now we've got an inverted yield curve. And so you're not really getting paid any extra yield for taking on some of that duration risk. And so what we've said to folks is, look, let's be patient this year. Ultimately, if we get this mythical soft landing that everyone seems to be betting on, then that yield curve is going to invert. It's going to re-steepen, I should say. I'm sorry. And that means the longer end of the curve is going to give you some higher yields. And so let's stay ultra short duration right now. Let's see how the year plays out and see if there's opportunities to kind of roll up and lock in for longer some of those higher yields.
What are the biggest inconsistencies right now in markets? And I ask this because a lot of people have been saying that bond markets are hearing what Fed Chair Jay Powell is saying, the actual words, whereas stock markets are just hearing that he said disinflation a couple times.
Yeah, I couldn't agree more. To us, the U.S. equity market is fighting the Fed big time. There are some major disconnects in how the equity market is positioning itself. We saw, a huge short covering rally. We saw, a low quality dimension to the rally. And now most recently, we've seen cyclicals outperforming more defensive stocks. What's precarious about that is that we have almost all the cyclical linked indicators, meaning recession linked indicators, like the index of leading economic indicators, which has really plummeted, and yet it's disconnected from this cyclical outperformance. So, I've heard the theories that people say, yes, we understand what should happen, but we're going to look through it. I don't know how far their crystal ball goes to look through it, but history is not kind to these kind of, massive disconnects.
Lisa, I just wanted to finish on something that's getting a ton of attention at the moment, so bear with me as I work through the issue. There are these things called 0 day to expiry options at the index level. It's getting a ton of attention. Julian Emanuel of BTIG, or rather of Evercore now, wrote about it. I've got to get used to that, Lisa. I know. Of Evercore. He said this morning. He said you had a 1.5 to 2% bull sequence yesterday. Why? Because 0 DTE options trading has become an important marginal price setter. He said this, Lisa, and I'd love your response to it. Look at options volumes yesterday, dominated by 0 and 1 day to expiry SPY options. And higher rates have caused this unintended consequence as people have moved out of 0% money market funds, deposited at places where they can get 4% interest and take 10% of their capital and trade options virtually for free every day. How do you respond to that, Lisa?
Look, I do think that we're in a period of time where there are some of these speculative excesses going on. And, Tom mentioned that we were chatting before going on air. And, right now, this issue of excess liquidity in markets, of huge piles of cash, still sitting on the sideline, it is there. And while Chair Powell did not want to address the realities of the fact that over the last 4 months, financial conditions have massively eased, he has not answered the question. The reality is we're seeing these bizarre perturbations in markets, this speculative activity, Jonathan, to your point, this use of options and this willingness to take these kind of, very high turnover strategies. And to me, that's an indication that, liquidity is at play, that market stability is going to once again raise its head as an issue that if Chair Powell doesn't want to talk about it, potentially some of the other governors who actually look at the data may start bringing up.
Lisa, that's great. The only reason I put up with Ferro is he perfectly explained that options insanity we're seeing within one day. John, you perfectly explained that. And it so harkens back to a time Lisa and I remember where there was actually a value to cash. That's really what this is about, is Taleb talking about the gravity's returned, and so is the idiocy that you explained.
Hey, Lisa, thank you. It's great to catch up, as always. Lisa Shallett there of Morgan Stanley. A couple of headlines for you from CBS. The Vice President, Kamala Harris, speaking to CBS right now. The President Joe Biden, intends to run in 2024. Now, the next headline says, if Biden runs, I will be running with him. So there's a lot of ifs, buts and intentions there. And I think we're still waiting for the same thing, aren't we? An official announcement. This is how you dance around it without saying it. You let the man himself say it for himself, right?
I guess so, but then why even, okay.
I think it's almost like she said it, but then it was just like,
John, pass me the surveillance cork, please.
You've got a box full. Futures down 0.5%. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Ukraine's President Volodymyr Zelensky is in London, where he met with Prime Minister Rishi Sunak. Now, they discussed expanding British military aid. Zelensky's also expected to meet with King Charles. Right now, he's addressing the House of Commons. Bloomberg terminal users can watch that on Live Go. The death toll from those earthquakes in Turkey and Syria has now risen above 11,000. Thousands more are trapped inside buildings that collapsed. Turkish President Recep Tayyip Erdogan visited the disaster zone today. President Biden's State of the Union address foreshadowed what could be his re-election stump speech. The president highlighted accomplishments on infrastructure, climate, and consumer protections in his first 2 years in the White House. But there was heckling from Republicans on Social Security and Medicare, the border, and other issues. And Uber posted fourth quarter revenue that beat estimates. That suggests rising inflation hasn't kept consumers from hailing a ride or ordering more takeout. Uber's revenue soared 49% in the last 3 months of the year. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
2% is the global standard, and that is our objective, 2% as measured by the PCE index. And that's not something we're looking at changing. That isn't going to change. My guess is it will take certainly into not just this year, but next year to get down close to 2%.
Chairman Powell yesterday, not making too many headlines, no big changes. Equities rallied off the back of it. Futures this morning down 0.5%. That's the equity story in the bond market. Yields still elevated at the front end. This move off the lows of last week through 440 on a 2-year. It sticks. In the bond market, yields come in just a little bit across the curve, down a basis point or two on a 2-year to 445, let's call it. On a 10-year, down 2 basis points, Tom, to 365.
Right now, we're going to rip up the script. We're very good at doing this, and we do it with a world-class expert on the issue of Hollywood and the rest. Michael Nathanson with us, who wrote a brilliant note on Disney a number of days ago, but we've been overcome by the news flow. He's with SVB Moffett-Nathanson this morning. Michael, you absolutely nailed the streaming failure, that the experiment would not provide profit. The Wall Street Journal reports this morning that Warner Brothers Discovery has just flat out blinked. Forget about all the happy talk. You've been to those dog and ponies where they talk about we're all going to merge together, and they've said no. They're going to keep Discovery separate. Why are they reneging on everything of the last year's plans?
Because, Tom, there's no overlap between HBO content and Discovery content, right? We've done a ton of work on this. There literally is no overlap. Maybe 10% of the market is unified. So putting Discovery content on HBO doesn't move the needle, right? So they have a niche service at Discovery Plus. They don't want to lose it by merging with HBO. I don't want to drive any new value at HBO. So that strategy is not going to work. And we always question, it's just such a hodgepodge of content, Tom,
right,
that it's best to keep it separate. But it doesn't solve any of the problems, which is that linear is declining rapidly, and there's not a big enough solution to offset that decline of linear economics in streaming for Discovery.
What is the time urgency for a company with 65% debt, or for that matter, the time urgency for the many streamers, John knows them better than me, that don't have critical scale? What's the immediacy here in 2023?
Yeah, we've labeled this the third act of streaming. And we think the next 1 or 2 years, your conversations today about the cost of money will affect this. When you look at the balance sheets of these companies and their cash generation, it's shocking, actually, how little cash they produce, even Walt Disney. So they have to use the next 1 or 2 years to consolidate, slow down content spend, raise pricing, right? They need to change the dimension of their business quickly. So I think it's 1 or 2 years, and that's the third act, right? Things will have to change, and it's to the benefit, I've never said this before, to Netflix. Netflix will now ride off into the sunset victorious because they've come through this, and now they generate cash, and their balance sheet is not as bad as everyone else's balance sheet. So it's pretty good.
Let's talk about what you expect from Disney after the bell today when they report earnings. You talk about consolidation, and you say that some of their biggest non-forced errors included the acquisition of 21st Century Fox, bidding on cricket in India and other sports that were non-primary for ESPN. I'm sure that will be a controversial call on your part. What kinds of consolidation or closures or layoffs are you expecting from Bob Iger's Disney?
Well, Lisa, I'm not expecting any numbers today. I think they're still going to work through a plan to give us cost savings. But the real question is, they changed their vision of Disney Plus. If you go back to the first Investor Day, they had a smaller vision, 35 to 100 million subs. And then during the middle of the pandemic, about a year later, in December 2020, they gave you a much grander vision of over 250 million subs. That's going to have to be ramped back, right? So I'm expecting a more sober outlook on the addressable market here. As part of that revisit of what the opportunity is, I'm expecting a reduction of the long-term spending they need to do to get there, right? So it's, to me, an honest discussion, which wasn't being had the past 12 months, about how much you need to spend in streaming, and isn't the business big enough at this point in time to start trying to drive better profitability, right? So I'm looking for a tone shift on investment spending when it comes to streaming. Not actual numbers yet, Lisa.
So just to build on that, for years we were talking about content is king. You're willing to borrow whatever kind of money you need to invest in whatever kind of production you need to. And now we're seeing, one production of a major franchise after another, whether it's Bond, whether it's whatever you want to do. And that's really the main output. What is the new mantra after content is king?
Well, it's platform is king. So you set me up well for that, right? You have to have a scaled platform, distribution platform. You need to get to the critical mass of enough people with a minimal amount of churn. And then I'm not sure content's king anymore. There's a lot of average content that's sticky just because you have this, scaled base where people come in every day to take a look at something, right? So you need to scale. At this point, there are 3 to 4 scale company. And why content's no longer king is there's too much content, Lisa. There's too many platforms. Yeah. And at some point, you need to ratchet that back. Maybe content will be king in the future. Right now, it's platform. scale.
I get some desperation out there, Michael, which frankly you've spearheaded research on, where Disney's taking the first episode of Mandalorian, they're going to put it out on cable or whatever they're going to do. But the bottom line to your enthusiasm about Netflix's editorial is Mandalorian is not Wednesday. That's the heart of the matter. It's still about making hits that John Farrell will watch at night, right?
Right, but Tom, you also need to scale it, right? You basically need, we've been saying this for years, Netflix has this constant, shooting model where they're basically putting shots on goal every day. The media industries don't have a model like that. They pick their franchises, they build them, they let them out slowly. Netflix has a model that's really hard to replicate. I don't think it's a great model, as you know, I've said that for years, but these companies can't get there because their balance sheets are too restrictive. They can't produce $17 billion a year of streaming content with a continual, release schedule every day of new binge titles. It's not a model they can get to.
Michael, how do we get revenue for some of these streaming industries? Is it through just pay for a subscription, or is this going to start to be more of an advertisement-driven model?
Yeah, Lisa, it's going to be a bit of return to what they had. You'll see people using Windows. So people go back to putting movies in theaters, shockingly enough. They'll have to raise prices, which just happened last month with Disney and Netflix. Or Disney raised prices. You'll have an ad tier. But I think you're going to see everyone start driving higher and higher revenues through pricing and advertising, and then also using windowing to try to offload the cost of the content in older windows, right? So this experiment to put everything at once in streaming the way that Warner's did it and Disney has done it has to be reversed. And that's what you're going to hear, I think, in the next year. Yeah.
Michael, can we get you in the studio soon?
Yeah, with Moffat.
Yeah, totally.
We've got to make that happen.
Yeah, with Moffat.
Drag Moffat in too.
There's no space.
I've got to talk
What's going to say?
We'll make space. I'll get up and leave.
That would be great. I would love to hear what you have to say about Facebook.
You get 2 for 1 in your seat.
Yeah,
Make that happen. Michael, thank you.
Michael, thank you.
Michael Nathanson there.
He's gone.
SVP Moffat Nathanson. Did he run?
Yeah, I think
but
so.
This is what he said there. This is really important and frankly more germane than all this economic babble we talk about all day. He's saying the idea that they throw 10 episodes out at once, because John, you binge this stuff, right? The answer is it's done. It's not economically intelligent.
Oh, clearly it's not.
Yeah.
You've got to roll it out, especially when you can get a 1-month trial and just watch the whole thing.
The Discovery upset today, the Journal story.
No, I'm just saying you can do that if you want.
No, true.
I believe the
Everyone
Shark
knows me
Week.
knows I don't watch TV, just news and sports.
The Shark Week channel is like $6 something a month.
Do you watch that?
What is that? I don't.
How do you know about the Shark
I have a
Week
Zenith black and white
channel,
and in the walk up it's sort of tough because the buildings are in the way, and I move the antenna
I grew up
around.
with one of those.
And I move the antenna around, and sometimes I can get Yankee baseball.
I used to
That's
have one of
about
those in my bedroom. Yeah, just the small TV with the.
Well, this is a bigger one. It was like 12,
What would you watch?
14 inches.
The sport, football. Yeah.
We would watch. My father had this, and he would watch Doctor Who on Saturday nights.
Yeah, exactly.
That's how that works.
A lot
Right.
about
Three
my
Stooges
childhood.
I used to sneak upstairs
Tarzan.
and try and watch the end of the Champions League football, which was always on a weekday.
Yeah.
So you'd have to go and watch the European Cup games very quietly. And the TV was in my parents' room. So
Ooh.
you'd sort of sneak in there and turn it on. And,
They didn't notice that you were kind of adjusting.
Well, they were
that.
Do you know the
Yeah.
deprived childhood I had? My
What's that?
father was so anti-TV, he took the channel changer off the TV, put a pair of pliers up there, and said, "And you can't use the pliers or you'll electrocute yourself." I'm not kidding.
Could have just
That's what your
removed
dad
the
did.
Yeah, my mother would get the pliers out to watch Gunsmoke.
Some of the
That's way
stories
it
I hear
worked.
about dads. I've got this
I
great
was a
story of
smart childhood.
one of my best friends. His dad used to tell them that when they heard the ice cream van, it meant the ice cream man had run out of ice creams.
That's brilliant.
How good is that? How good is that?
That's scarring.
Live from New York. This is Bloomberg.
Bloomberg Surveillance, Jonathan Ferro, Lisa Abramowicz, and Tom Keene. Mr. Ferro's on assignment. Lisa Abramowicz and I pick up the pieces here. How many Fed speakers today, Lisa?
I didn't even count.
8,
We've got
9,
something incredible.
whatever.
Yeah, they're all lining up to give their 2 cents after yesterday's
In the
Powell
next hour,
discussion.
John Williams of the New York Fed will speak. He will speak as an authority and a public official. We'll do one better. Joining us, and let's get right to it right now, with William Dudley. He is the former New York Fed president preceding John Williams. He writes for Bloomberg Opinion. We are honored by that. And most importantly, he has led an incredibly consistent and cogent debate of how we need to get used to higher interest rates. We need to get used to a more sustained inflation and do something about it. Bill, what do you make of the cacophony of the last 10 days? Just as an open question to a former official, your followers speaking here in the next hour, what do you make of the last 10 days?
Well, I would say it's really much ado about nothing, because at the end of the day, how the economy performs is going to determine how much the Fed does. And any disagreement between the market and the Fed is being resolved by the economic data. What we saw on Friday is a good example of that. We had a very strong employment report, and the market is now repriced to basically mimic what the Fed has written down in their December summary of economic projections. The market's now pricing in a 25 basis point rate hike in March and a 25 basis point rate hike in May. That's what Fed officials have been promising. So we're pretty much in alignment now.
What is the character of our disinflation? The textbooks you studied at Berkeley would be something like there's a 60s, 70s pre-Volcker inflation. There is a Korean War sharp disinflation, which the laureate Krugman wrote about just in the recent days. And then there's a whole discussion about the Biden stimulus and almost back to Friedman in a monetarist dynamic. What does Dudley disinflation look like?
Well, I think part of the problem is the debate's been muddled is because people have either put themselves in the transitory camp or the non-transitory camp. And the reality is we have some of both. In the transitory side, we had a lot of goods pressure, inflation in the goods market sector of the economy because of the shift in composition of demand towards goods during the pandemic. That's all unwinding now. But we still have quite a bit of pressure in services inflation. And that's one thing that Paul has highlighted. We need to get services inflation, ex-housing down. And we're not going to do that until we have more slack in the labor market. The labor market is basically the tightest labor market in memory. And that is not consistent with a 2% inflation outturn. So the Federal Reserve needs to push the unemployment rate up, generate more slack in the labor market, get wage inflation down. And only once they have done that can they be confident that they're going to get inflation back down to 2% on a sustainable basis.
What's the role of financial conditions on that process of disinflation?
Well, the financial conditions are sort of the way that monetary policy impulse gets translated to the real economy, right? So if the Fed raises short-term interest rates, but nothing happens in terms of the bond market and the stock market, it's not going to have much of a restraining impact. So it's really important that the rise in short-term rates affects bond prices and stock prices. That's how the Fed grabs the real economy. We see that in the housing sector. It's the rise in long-term interest rates, the rise in mortgage rates that's really cooled off housing. That's how the Fed gets traction on monetary policy. I think Powell basically is not that disturbed by the marginal easing in financial conditions we've had over the last few months, because he knows that if the Fed keeps going, financial conditions probably won't ease much further, and the Federal Reserve will actually be able to get control of things.
Well, this is a really important, Bill. Basically, you're saying it doesn't really concern Fed Chair Jay Powell because he thinks that when they actually enact tighter financial policy, the markets will adapt and adjust. In other words, stocks will fall, and you won't get the same kind of rally that you saw in January. That's a different message than the market's taking away, which is that he doesn't care. Can you explain why you have conviction around the view that he just knows that eventually they're going to realize and they're going to see the light?
I think part of the issue here is that there's a lot of uncertainty about the economic outlook. So Powell isn't really sure how much farther he has to go. So he's not really sure if financial conditions are off relative to where he needs them to be. What he does know, though, is that he controls the policy rate. And so if he needs to slow the economy down more, he can just raise policy rates higher, or he can keep them higher longer. That will tighten financial conditions and do the job. So the Fed's in control here. I mean, financial markets can think whatever they want, but at the end of the day, the Fed Reserve is going to write the script based on where they take the federal funds rate.
Bill, there's a guy out in San Francisco a number of years ago who had stars in his eyes and developed R and then R starred, and now we're talking about R starred. You watched the ascent of John Williams and his great respect within monetary economics, and now he sits in the chair you had in New York. Explain R starred and its importance in this cacophony that we're living in right now.
What we're trying to do is figure out what level of short-term rates makes monetary policy restrictive. So to do that, you have to have some notion of what's neutral. In other words, how high should nominal federal fund rates be to have a neutral monetary policy? And that's where R-star comes in. R-star is an estimate of what the neutral interest rate is after adjusting for inflation. And R-star came down in the last 10 or 15 years. It was running 2% prior to the great financial crisis. Now it's around, probably somewhere in the 0 to 1% range. But you have to have a notion of where neutral is before you can think about what's tight.
Right. Well, if that's the case, do we have a confidence in our meaning-to-meaning monetary theory, given the effect of technology, the effect of demographics, the effect of larger factors that Olivier Blanchard's writing about now? Do we have a confidence the formulas work?
Well, I think you're pointing out the fact that there's a lot of uncertainty exactly where neutral is. And so the Federal Reserve is essentially trying to push monetary policy to a saying that they're confident that they're in restrictive territory. They probably don't know how restrictive, but they're confident that they're in restrictive territory. As long as they're in restrictive territory, that will slow the economy and bring inflation down. Now, if it turns out that R-star was much higher and a 5% nominal federal funds rate wasn't enough to push monetary policy into restrictive territory, the economy wouldn't slow and the Federal Reserve would ultimately have to do more. So the uncertainty about R-star translates to uncertainty about how tight does monetary policy have to be, how high does the federal funds rate have to go, and how long does the Federal Reserve have to keep it there.
That dovetails perfectly into Friday's labor market report that really shifted the narrative for at least the bond market.
Bill nailed that. Bill was out at 500,000.
But this really raises a question of whether it was material enough to shift your view of how high R-star has to be, how high the terminal rate needs to go.
Well, I think at this point, the Fed's game plan is to go to what they think is restrictive and then keep it there as long as it takes. I think if they are faced with stronger data, I think it's more likely that they extend the timing of how long monetary policy is restrictive, as opposed to keep raising the rate higher and higher. Now, obviously, if the economy stays really strong, then they're going to revise up their forecast of what interest rate peak is necessary to slow the economy. But I don't think we're there yet.
But do you think that
5 to 5.25 is still where they're headed, and then they're going to hang out there for a while? If the economy stays strong after you get to 5 to 5.25, then you could see them move even further.
I remember we used to talk about the improbability of a soft landing, the improbability of getting this to land in some sort of nice way. And now that's the base case. Do you push back, or do you think that it looks more and more likely that we could get some sort of immaculate disinflation or a soft landing?
I think it's still unlikely. I mean, I think it's true that we're not going to go into recession anytime soon. The economy just has too much forward momentum. If you look at the Atlanta Fed Now, a GDP Now forecast, they revised it up by over a percentage point just in the last week. So they're looking for 2.1% growth in the first quarter. Before it was less than 1%, just on the back of last week's data. So I think the economy has quite a bit of momentum. I do think, though, recession is likely in the medium term because the Fed has to push up the unemployment rate by a meaningful amount to generate that slack in the labor market. And every time the Fed has pushed the unemployment rate up by more than half a percentage point, we've always ended up in recession. I just don't see that this time is going to be any different.
Do you think that when we look back from a historical perspective, can write the book on zero rate policies as having ended without any sort of financial accident that was material?
Well, I think all the things that we did to fix the financial system following the great financial crisis have helped a lot. I mean, the banking system's in much better shape, much more capital, much more liquidity, stress test, risk management. So I think the financial system is stronger now. And that's why the Federal Reserve is in some way in control of the process. Once the Fed achieves its objective, it can cut rates. And so if the economy turns out to be weaker than the Fed wants at some point, 6 months, 12 months down the road, the Federal Reserve can cure that pretty quickly because they're going to be at, 5% in terms of short-term rates. There's going to be plenty of room for the Fed to stimulate the economy. That's why Powell, said that, the risk of staying too tight too long is less than the risk of not doing enough because the Fed has the ability to support the economy when the time comes.
Hugely valuable. Dr. Dudley, thank you so much. William Dudley, the former president of the New York Fed. And this dovetails beautifully, folks, as the PhD from Berkeley gives way in the next 45 minutes, I'll suggest, to the undergraduate from Berkeley. He did better than good there. John Williams went from Berkeley on to Stanford and LSE. Michael McKee joins us with a brief here. How R-starred is our morning here? All of a sudden, after the Powell soiree yesterday, the set of Fed speakers, and particularly what John Williams will say, seems to be important.
Well, the thing about Williams is he is the president of the New York Fed, which makes him the vice chairman of the Open Market Committee, not the Board of Governors, but the Open Market Committee. And by tradition, the vice chair does not dissent from the chairman. And so whatever Williams says basically mirrors what Jay Powell is saying. In this case, we've had Powell speak first, so I wouldn't expect a lot of deviation from John Williams in his remarks today.
How much does tone matter, though? How much did Jay Powell basically sound a hawkish message with a dovish sort of calm tone that perhaps markets took the wrong way?
Yeah, it was kind of interesting. I asked you yesterday when we were on the air what they should have said. And that's the hard part, because they're saying what they mean, but I guess the tone hasn't been strong enough. Williams is not somebody who is going to come out and pound the table. There are other people on the Open Market Committee who might do that. I think he will probably push the idea that the Fed is not done yet, but I don't know that he's going to say to the markets, you're wrong.
Give us a view of claims tomorrow. I'm still not used to under 200,000. Is it a fully employed America?
Well, it's definitely a fully employed America. I mean, by any measure, the amount of friction in the labor market, the number of people who are just changing jobs on a regular basis is very, very low now. You can see that in the unemployment rate of 3.4%. Now the question is what's been happening with the people who are getting laid off. A lot of them, the announcements have been made, but the layoffs haven't come yet. And it appears that a number of people are getting jobs at a fairly quick rate, or replacement jobs.
Through the day, Michael McKee with us, of course, with all of our economic. That was, Lisa, that was just phenomenal with Bill Dudley.
Yeah,
that
especially.
was just some real serious theory.
He was saying also the reason why Jay Powell didn't push back against markets more is because they'll come around when they actually see what they do.
That's
interesting.
From the gentleman formerly with Goldman Sachs. We'll continue. Stay with us. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Turkish President Recep Tayyip Erdogan is visiting the disaster area today that was struck by two powerful earthquakes on Monday. Tens of thousands of soldiers are helping with search and rescue efforts as the death toll in Turkey and Syria pushes past 11,000. Many people are still trapped inside buildings damaged by the quakes. President Biden taunted the leader of China in his State of the Union address. The president said, "Name me a world leader who would change places with Xi Jinping." It was his most fiery reference to China in the speech, days after the U.S. shot down an alleged Chinese spy balloon. House Republicans are opening their investigation into Hunter Biden and the Biden family finances. Today, they'll ask former Twitter executives about their alleged cooperation with the FBI to squash the story of the younger Biden's laptop. Democrats call the investigation purely political. Shares of Manchester United are surging in New York. The Daily Mail reports that investors from Qatar are preparing to make a bid for the English Premier League club in the coming days. Now, Manchester United has been the focus of speculation since last year, following news that its U.S.-based owners were considering a potential sale. And in the NBA, Los Angeles Lakers star LeBron James has broken the league's career scoring record. His jump shot against the Oklahoma City Thunder eclipsed the mark of 38,387 points that was set by Kareem Abdul-Jabbar. Now, tickets for the game sold for as much as $80,000 in the secondary market. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
Some Republicans want Medicare and Social Security to sunset. I'm not saying it's a majority. Let me give you, anybody who doubts it, contact my office. I'll give you a copy. So, folks, as we all apparently agree, Social Security and Medicare is off the books now, right? They're not to be stopped. All right. We got unanimity.
The festivities last night, led by the President of the United States, Mr. Biden, of course, Vice President for Barack Obama. And Lisa, this is really the high point for me, which is not the idiocy of our political dialogue, but how do these speeches get written?
I assume it
by
is
committee?
I assume that there probably is some of that, because we heard about that, right? Brian D. sort of gave a nod to this idea that it's probably a lot longer than it will be, and that's just part of the process.
We'll be bipartisan here. He is a Democrat. He worked for Ted Kennedy. He wandered through the White House of a guy from Chicago. Cody Keene joins us now. Former chief White House speechwriter for President Obama. Cody, thrilled to have you here for Republicans and Democrats. How many people are in the room when you write a speech?
Ideally, one.
Yes, I'll go with that.
That's
but what's
perfect.
the reality?
The reality is that Brian Deese was one of, just bar none, the best people to work with on this thing, because he has an amazing political and communication sensibility. But there are a lot of cooks in the kitchen. I'd meet with every single cabinet secretary. You've got people staking out the bathrooms trying to get me and get their policy positions in there. You've got every outside organization trying to get their piece in there. So I felt a lot of sympathy for the speechwriters going into this.
The Obama speeches hearkened to Lincoln. There was an integrity of the Civil War, of the word freedom. But what I remember is a better history, a better life. Does Joe Biden have an equivalency? Does he have phrasing that harkens back to what you guys did for President Obama?
Yeah, absolutely. I mean, the two of them have very different styles, both writing and speaking. And Joe is just President Biden is just very into...
No, excuse me. With Bloomberg surveillance, you can call him Joe.
Carry on.
President Biden.
He was, you saw, I like that he used the phrase blue-collar blueprint instead of some over-torqued, hackneyed phrase, because, he feels that. Right, from growing up in Scranton. I thought the best parts of the speech, he's got this empathy to him, he always has. And the best parts of the speech were when he was talking as a son who had a father who fell on hard times, as a father who's lost children, as a president who cared about everybody. Those are the parts that really soared.
As a speechwriter, do you like it or do you hate it when they go off script?
Both, because it's always a high wire act. We worked so hard on every draft. I mean, President Obama would be involved down to the syllable for a speech like the State of the Union address. So when you go off script, it's always like you just kind of hold on real tight. But last night, I thought it worked to the president's advantage.
A lot of people are talking about whether he's going to run in 2024. There were some comments on CBS this morning from Kamala Harris talking about Biden running again in 2024. And then if he ran, she would be his vice president. She would run with him. What do you think is the feeling? And what do you think is the calculus that perhaps other people aren't hearing about when it comes to that?
A couple things. People forget now, but back in 2010, 2011, there were Democrats saying maybe we should run somebody other than President Obama. It sounds weird in retrospect, but it was true. Democrats will always come home, so I'm not worried about that at all. I thought one thing that was interesting about last night was his energy level and the whole vigor thing. In a lot of the preview pieces, there was kind of this sheepish appendage. I was like, people be watching to see if he can deliver a speech. He went longer than any of Obama's 8 State of the Union addresses, with more energy than I have at 10 p.m. In my defense, I have a 2-year-old, but I think it made him angry.
Yeah, I felt the same thing about the energy. I want you to give advice to our Republican listeners and viewers. Let's assume there's some form of new Republican voice out there. How do the Republicans get the next voice that they need to have, to find the next language that conveys their message?
I actually think it's pretty simple. I don't know if they'll take this advice or not, but I was watching the response from Governor Sanders, and I think the Republican problem is they can no longer give a speech to an audience outside the Fox News bubble. They don't speak to the middle of America anymore. There was a lot of, kind of coded culture war stuff in her speech last night that I think most people tuning in, I don't know what this is. I don't know what she's talking about. And I think until they find somebody who can kind of speak to the middle of the country like that, they're going to have some problems.
Well, we were talking about this earlier, and it becomes really difficult because when media talks to a Democrat, often Republicans will close their ears, or when the media talk to a Republican, often the Democrats will close their ears. What is the solution to a less sort of tribalized politics going forward?
We tried that for years. And every State of the Union address, we would be criticized for including a big section at the end about unity, about a better politics. People would say, why are you wasting your time? You just got to keep working at it.
I was at the post office watching the shock of the Democratic elite the night your mentor, Ted Kennedy, limping, got up on stage and introduced a guy named Kerry to the Democratic Party and the American public. They were stunned over that John Kerry victory. Are we at a sea change now that you see within both parties where we're going to be as stunned as we were when Ted Kennedy introduced John Kerry?
Maybe. I don't know. I think both parties are going through big generational shifts.
Yeah.
You saw kind of the backbencher shouting last night. I think one of the things that's changed is there's sort of this fame seeking, that you can get on social media and whatnot, where it's less about governing.
Right. Did you read Strunk and White? I mean,
yeah,
is that how you got here?
Long time ago, yeah.
Okay.
No, I went to work for Senator Kennedy just as a young policy aide, and I fell into speechwriting. I was on the floor at the convention in Boston the night that...
I'm just asking for my kids. They can't write a damn thing. Strunk and White works still, right?
It does, but actually reading is the best way to become a better writer.
That sounds like Brammo 101 there.
100%.
There we are.
I have 4 editions of Strunk and White, though, so you can't underestimate that, too. E.B. White's fantastic.
Mine were all given to me by Matthew Winkler. Cody Keenan, thank you so much.
Thank
Greatly
you.
appreciate it. He was a speechwriter for a senator and a president of a long time, not a long time ago, but of the past as well. We are looking at markets that are really extraordinary, Lisa, with futures at -20. And, the shoe to drop to me was, as John mentioned, the way the markets recovered yesterday afternoon. I didn't expect that.
Does the melt up end when the Fed actually raises rates again in March, like it seems probable based on a lot of the speaking? And that's the reason why, as we head into the 9 o'clock hour, we're going to be really keeping an eye on John Williams and what he has to say, whether the tone in which he says it changes the message that Jay Powell tried to deliver yesterday.
And I would go back to the adjustment seen over the weekend, which is all of a sudden, to borrow a phrase from, off of what Cody was saying of the Democrats, the Republicans coined it Morning in America from a long time ago. I'm sorry, 3.1% GDP for the year end was an extraordinary statistic which confounded everybody's built-in gloom out there.
There is a perversity to this discussion, and it is deeply uncomfortable to have a conversation about how bad it is for there to be such an employed America, right? I mean, it's a great thing for people to be getting jobs and for people to be getting salary increases. It becomes complicated when we try to look at what's next, and it's never been more complicated to see.
We talked about this earlier in the show today, but let's go there. Delta Airlines, Ed Bastian taking control, saying the pilots get 8.5% a year over 4 years. They're in negotiation on that. I should point out, pop 5%. I believe off the article that Bloomberg reported on, Bloomberg reports 5%. Everybody.
5% all non-union workers get a 5% raise this year following a 4% raise last year. And this comes as the service sectors still have this stickiness. I mean, they need people. You can't, John says this all the time, you can't fire people you didn't hire, you couldn't hire. And you see that in a lot of these sectors. When does this shift? I mean, do you see any kind of demand destruction in airline tickets? I don't.
Well, I've been more optimistic on the experiment than a lot of other people. I'll go back to Jim Glassman at J.P. Morgan, who's perhaps been more prescient than anyone I know in all of his conversations, as you point out. Every single conversation he says is they worry about this, they worry about that, but for themselves, it's how do I retain employees? How do I find the next marginal employee?
So how does a gravitational force of money that actually
you nailed
gives something?
What are we going to do with a 5% one-year T-bill? We're not there yet, but I'm sorry, Lisa, the short-term paper market, the Ira Jersey world, to me is incredibly prescient right now. Witness farther out, the 2-year yield, 4.46%.
Well, and John raised this question of the options trading, the spin-off of the cash that you get from investing in short-term debt. Does this actually have a disinflationary aspect, or does it, for the moment anyway, encourage some of the spending?
Yeah, I'm not willing to say it's disinflation. I'm willing to say it's a conversation from another time and place.
It is.
I need wider lapels, and yes, I wore a bow tie back then.
I don't think anyone was asking that question. I think everyone knew.
We thank our team for great agility today on the news flow, particularly with Michael Nathanson, Moffett Nathanson. John Williams will monitor that important statement by the head of the New York Fed. Stay with us. This is Bloomberg Surveillance.